Morning, everybody. Hello. How's everyone doing? What's up, Lumps? Missing Link? John? Hello, hello. Hello, everybody there on Twitchy. What's up, Barkster? Welcome to the newsroom. Trading from the headquarters. Way up in the sky. My multi-billion-dollar studio. What's up, Nolan? Hey, what's up, Jalen? Good morning. Today, I figured, because I'm not really trading much today, intraday stuff, well, at least right now, I was thinking maybe we can go into some, just look at the markets and some individual names, see what's setting up out there. I did a video and I went over like 1 million stocks, a lot in the healthcare space and some other ones too. What's up, Felix? What's up, Savage? What's up, Michael? What's up, Cortex? Topher? Oriel? Amazing setup. Thanks. Okay. Some more people are rolling in here. We're going to we'll take a quick look at the markets and then go from there. You forgot to sell your gold yesterday. Got caught up with something. You never know. Can probably make another all-time high again. We'll see. Today it definitely got a hit. We'll look into gold. It's always night over here. What's up, Michael? We can look at bull. Yeah, we can drop some tickers in the chat in a moment. I'll be pulling up. We can pull up community names, and then we could pull up a bunch of names that I have on my list. All right, let's see here. Okay. Welcome in. What do I use to get these backgrounds? I built them. I made them all. Yeah, my backgrounds are all custom made by me specifically. It's pretty crazy. It took a long time to. I know Photoshop pretty well. I used to do that, dabble in it a long time ago, and then the use of AI makes things a little bit easier. So I know how to like create layers and the basic stuff to create these kind of backgrounds. But yeah, everything, all these scenes were I made. So like the Tesla car where I can turn its little lights on and off. The pineapple, the rocket ship. My library, being in my little library over here. What else did I have? I thought I had some other ones. Just chat. Yeah, all this stuff was just, this is all me. The little lights and everything. Yeah, Topher, I plan on doing that. I've been just busy with a lot of stuffs. Yeah, there's a lot of features in there. So I figured once the Azure stuff is all completed, I figured I'd try to put together like a video to do all of that. All right, let me lower this music down in the background. Let's hop over here. Comcast. This thing has gotten smashed. I was watching this little trend line. I'm like, yesterday, I didn't take a position in it, but yesterday I was looking at it. I was like, dang, this thing looks like it's ready to at least bounce or something. Give me a second here. Make sure my, okay, it's working. Okay, what we'll do here is let's drop some tickers in the chat, and then if anything pops on my radar, we'll pull up some individual names so I can at least have some of the ideas that we can go over. Let's look at the SPY right now. We'll just take a look at the market. A quiet day. We're up 17 basis points, so not much going on. Good to see you too, Varma. We'll look at biotech for sure. Yeah, so SPY up 16 basis points on the day. It's basically a nothing burger. We still have a wide open daily range, still trading well within that. And we're trading up near towards the weekly expected move, right? So remember, 70% of the time we'll tag those, whether that's the upper and or lower, right? There's obviously a lot lower probability of tagging the lower, but you never know. You just never know, right? You can get a crazy tweet out or a post on X or whatever, or Truth Mobile or whatever it's called, and crazy things can happen. But right now, the flow has been quite bullish to the upside. Back month versus front month volatility did reach into that level where we said, hey, this is where things could bounce. So it did do that, and we bounced. And then also to note, we are back above the gamma flip line. And when you're above the gamma flip line, volatility, typically comes in where you have dealers start to buy the dip and sell the rip, buy the dip, sell the rip. So it's more stabilizing flows in the market. And when that happens, you get smaller up days, right? And then every once in a while you get a vol shock, and then it comes back up, smaller up days, and so forth. And that's where we're at, right? If we look at systematics, they're still in a position to become sellers. So that's kind of the downside is you got still real risks via the systematics that can really drive volatility. And we saw what that looked like on, this day. You saw and you felt what it looked like, but as we stated in the market briefs, like it's going to feel a lot worse than what it actually is, given the setup. And while we did it, we didn't even retest the lows. I mean, hardly. I guess you can call this somewhat of a retest of the lows. I don't think it quite got down there though. Let me see here. 653.17, low 653.17, 652.84. So yeah, no. And then from that point, we bounced right back up, and we're a stone's throw away once again from another all-time high. And we're moving into more of a bullish period into the year, right? The end of the year, you typically get some nice moves. So in my opinion, I mean, it looks like the market wants 7,000. I don't know, what it's going to look like in order to get there. But if I look at net gamma, if it loads the main level, the main call wall, people are reaching out to 7,000 still, right? So we're at 67. Well, I'm just going to round it to 67.50. We're right here, slightly below it. And there's not much beneath us, right? There's like this just kind of trap. So, once again, still a precarious place to be in, but we remain kind of just reaching out further. So you're going to probably have some problems up at around 6,800. But if traders keep on continuing to push higher, 7,000 it's a realistic to think that we can go there. And if I pull up, the quarterly implied move, an upper monthly implied move, that's up in these areas, right? That's up in these areas. Upper quarterly M is at like 6,200. The JPM caller, the upper bounds of that is at 7,000. And then the monthly for just this month, that'd be pretty big move in just a few trading sessions. We'd have to have some sort of probably catalyst to drive us there, maybe earnings. So yeah, pretty bullish, pretty darn bullish still. Let's look at Qs really quick. Qs looks like it's going to be tagging to all-time highs here. IWM looks pretty darn bullish too. This is still within a pretty bullish channel. It did break out to a new all-time high, and then it kind of came back, sat back in, but it's still above a rising 20, rising 50. I mean, if this thing takes off, you can be hitting the upper bounds of this channel. Last week, it looked pretty nasty, a big reversal candle, but, no follow through. I think same with like the miners, right? We talked about miners. Like that was a pretty nasty reversal week. I did short the miners. I'm out of the position, and then I converted it to shorting gold on yesterday's trading session at the close of business. So I got lucky twice on entries because they both made dramatic moves the very next day, which forced me kind of to get out of the position. Mainly because I don't like holding shorts for too long, and I like to see if they just kind of reset back up. But yeah, look at GDX today, miners, it's down 10%. So that dust position that I was talking about, that's up 20% today. The JNUG short position that I was talking about, I mean, this thing is down 21%, right? And I mentioned shorting it up over here. Pretty wild, and I didn't hold it all there. by any means. I got out that day. So, I missed out on a lot there. I used GLL to short gold yesterday into the close, and I'm already out of the position, I think. And then intraday today, I actually took long GDX. I took long GDX right in and around these points, and then I sold it into this trend line. And now it's coming kind of back down here. So that was my only intraday trade scalp today, was just looking for a potential pop-up higher. And I might be setting up again for just a short intraday pop. I went pretty heavy on it, and I did probably a couple thousand shares, but it was, once again, intraday, and I just played a quick little bounce. Boom. Okay, yeah, so gold. I want to just look at gold here really quick. Yeah, big move here in gold. And this is to be expected, right? This is all to be expected. It went parabolic to the upside. You're going to get big moves to the downside. These are pretty wild moves. Yesterday, today, 5% moves in gold is obviously not normal. Like a GLD is down 6%. I'm assuming SLV is down more, 7.4%. Look at this. So look at how silver actually bounced here pretty substantially, and yet miners didn't. And I like silver's correlation to gold miners more than gold to gold miners, to be quite honest. One, the 20-day rolling correlation is actually stronger negatively with silver and miners than it is gold and miners. A lot of people yesterday were talking about gold was up big and miners weren't. I'm like, yeah. So look at silver. Silver wasn't up, and it was tracking silver once again. But for some reason, gold miners, gold. I don't know. I look at silver. Okay. Let's see here. We'll go into some of the Mag 7 stocks momentarily. And then I want to touch up on some of those healthcare names again. I took a few positions in healthcare names. I took one in VTRS. I thought that was kind of a nice looking setup, just kind of breaking out. The only thing I didn't like about this one, so I kind of kept the position small, was the 200 still declining. I did take Gilead. I like the look of that one on breakout. I took that a bit ago, and even a better entry was over here when I originally posted it. So I have a little position. I have whatever position in Gilead. It's bigger than the VTRS. And then Oscar Health, that one I'm in right now. Once again, this is kind of size smaller because it's so volatile. And then when I look at the weekly time frame, I mean, this thing, if this is actually going to play to the upside, I want to kind of hold on to it. So in order for me to hold on to a move like that, it has to be a little bit smaller of a position. But this I felt like could have been an early entry into retest this area. And then if it wants to keep going, awesome. Yeah, we'll look at some of those Mag 7. You're talking about Google. Metals is going to go down while crypto goes up. Yeah, maybe. I do have Bitcoin. Oh, wow. Bitcoin's actually performing pretty nicely today. Now I got to refresh this and see what's going on. So I did take Bitcoin. I did take I used IBIT, and I did it down here. This was actually one of the trade ideas. I posted it because we had such a dramatic sell-off into this purple line, and this purple line is the year-to-date volume weighted average price. And when you have a dramatic move like this into a key VWAP, I'm going to probably execute into it, right? A very dramatic move into a key level makes sense to execute. Let me see here. Did I post this one in trade ideas? I'm almost certain that I did. I don't think I'm dreaming that. Yeah, on 10/17. Yeah, so when this candle was red here, I launched that one out in there at 7:26 a.m. And I myself took a position there too as well. And I still have it. I took some off. I took some off yesterday. Not today, I don't believe. I'm gonna refresh this. Yeah, that's that's a big player, man. Shoot. Yeah, it's up almost 9%. So when did I buy this? Oh man, it was even lower. I bought it. Geez, did I bottom tick this dang thing? My average price is $59.46. Holy moly. Straight like bottom tick this thing. I had no idea. Look at this, $59.46. That's my average entry right there. That's crazy. That's wild. Holy moly. All right. I mean, I'll take it. I don't have, but I did reduce yesterday, so I'm not getting like all the benefits of today being up, 2.6%. I'm getting some of the benefits, but not all of it. Another name that I entered into was IQV. This one I posted on Twitter, or maybe not Twitter. I can't remember where I posted this one. I definitely talked about it in that video, but IQV, just another, tight setup in bullish context. I love these type of things. They offer pretty clean risk to reward. It's already, in 2 days, a 1-for-1. So good look, good breakout. Thanks, Tuffer. Will I ever teach, hey, what's up, Generator? Futures trading? Yeah, I could. It's trading is trading, so it works kind of the same way. Just a little bit different strategies, obviously, because risk is significantly different, but you wish you didn't sell, yeah. Hey, but Brian, if you reduce it, you locked in some profits. If it crashed today, if Bitcoin for some reason crashed, you'd probably be like, wow, I'm so glad that I took it, So don't get too caught up on that, beating yourself up or anything for, wishing that you held it. Because there's going to come times where you wish you didn't held it. So you're going to hold it, and then you're going to wish you didn't hold it, And those are the worst times. So, just reduce risk when you can, or when it makes sense to, or, if it's too big of a position, you can reduce it or update stops if you want to keep something on. There's so many different ways to go about it. You just got to, you just need to be consistent with it, I guess. And Hawk, your TOS, I hate my TOS default layout. Yeah, there's some, you gotta do some adjustments. I don't know exactly what I did with my layout. I think I've shared my layout before, this, because I have like 4 different screens. You can, unmaximize. I can restore my cells so I can see weekly, daily, 15-minute, and just intraday. But then I like to maximize the cells because I don't like looking at tiny charts. And then I could kind of switch between them up here on these little arrows. Oh, for sure, Brian. Hey, what's up, Sneaky Man? Plenty of times I wish I didn't hold. yeah, same. We've all been there. I'm fine with holding things that are going against me as long as just the position is not weighing on my portfolio. By a lot, because sometimes when I look at that, and if I'm taking something that's been for example, I'll just look at Comcast. I don't have a position in Comcast, but let's just say I was thinking that we're going to bounce right here, which, kind of we are. And if I took a position, it's going to be tiny given the context of trend, because I think that we're going to get a bounce. I'm not going to go heavy. And if it goes more against me and it's such a small position and it still keeps this steep trend line, I don't mind scaling a little bit because I know that we're going to get some sort of a bounce at some point. And if for whatever reason we don't get the bounce and it just gaps down 10%, just, and something, and I'm all right, then I'm out. The position is still not obnoxiously large where, you build into it, say if it's 3%, which keep in mind, 3% to, us retail traders, 3% of your portfolio, it's not much, but if you're talking institutions and they put in 3 to 5% in a position, that's a big position. That's a huge position for institutional type traders. 5% of their capital into a single equity that has a beta of 2 to 3, it's pretty wild. But if you go all in too fast, you get stuck, and then you end up hoping and praying that you bounce back, and that's just nasty. It's like gold miners today. Like gold miners, if I were to take a long today for an intraday trade, I don't like the look of it right now. That's why I was watching it more down here when I took it, but now it's been kind of just doodling like this. So if this snaps down like right now and it keeps going and going and going, like I wouldn't mind once again looking at more of an intraday type scalp of some sort, but it's going to be smaller, right? And then if it holds the trend and kind of continues to bleed out, I can create something with it, but I just got to be patient to let it happen. And then when I get out, it's going to be pretty aggressive. Yeah, we can look at those names. Let's look at some of the Mag 7, and then we're going to go from there. We do have stuff reporting earnings. GE reported that this one was, I think I talked about this name the other day. That looked pretty nice. It's just, a little bit long in the tooth. Up a little bit today on earnings. So that reported LMT. This is another one that we discussed. This one was more of a catalyst driven, or potential catalyst, but it also still looked good. Earnings came out. It's down slightly. Was up kind of in no man's land. RTX was another defense name that we mentioned. Yeah, look at that thing. That thing took off. What about NOC and OC? There was a lot of different. So we were talking about those like tomahawks in a prior video. And a lot of these setups that were occurring in the market, they looked good in and of themselves. But if you have the catalyst actually play out, like that, it could have been pretty astonishing to see how big these moves actually could have been, right? Like defense names or even oil at that point. But we talked about how, miners could be a good short. Well, imagine, right, because of those correlations, if the catalyst actually did play out. Like it was already a good trade, but imagine if we had that catalyst to even drive even more movement, could have been something quite amazing, but we didn't. At least we don't right now. It might happen later, but we didn't get it. Okay, let's look at the Mag 7 here really quick. Apple, new all-time highs in Apple. Earnings around the corner. Not really a good setup here. I think the last setup that we talked about was down here in Apple. And it played out nice. You got some volatility here, which probably shakes them out, but overall it held this low. So we have price move on strong volume, consolidate, higher lows continue, and we push further. I think the main area for target was at 250, and we're trading above it now. Microsoft doesn't look horrible right here. So if this, market wants to continue, Microsoft's coiling up. Right? So you have this kind of cupping pattern, this little handle here. You're building in these higher lows. So Microsoft, if it wants to just break this high of today or tomorrow or yesterday's high, you go retest this right here in a matter of a day and potentially even new highs. And you can see there's a big reversal here. This was earnings. You gapped way up, closed at the lows. It marked a reversal, right? And now it's just consolidating it off. And you look at the weekly chart. What was this? Talk about just algorithm smashing the buy button. This thing was just weekly, and then you have this blow off move over here, and then it goes through its consolidation. And now you're getting, 1, 2, 3, 4, 5, working on 6 weeks of tight price action in a bullish trend. The setup's there. So if you go long it, you'd be probably more, geez, it's like, let me see here. What's the risk? I don't like how it's not up today. Okay, there we go. Minus 2%. Let's go under 500. Let's go under this low. So yeah, okay. So minus basically 5%, right, would be the risk. Like say if you're trying to target up here at another high, that's better than a 1-to-1 risk to reward. Now, if you want to go tighter, you can say, an ideal stop would probably be, 2.5%. But then you're kind of so close to this round 500 level here. It's like, So nothing happened in Microsoft, but nothing bearish, nothing bearish is happening right now other than what happened over here. It's just more of a consolidation, and it's offering up tighter risk to reward here. You just got to be mindful of that. Google down on the trading session today. This one broke out. I mean, this has been pretty bullish too. Really bullish. New all-time highs is not necessarily bearish. Doing this little thing here. Amazon, this one hasn't gone anywhere all year. It's seen a bounce today. We were talking about how discretionary names, like for example, Tesla and Amazon, and then the rest of the list, the bullish percent index was pretty oversold. So to see some of these kind of lift off and take a second to move makes sense. And Amazon, you know, it's not a great trend by any means, but you know, Google wasn't also, and that was a trade idea. So Google down here, right? This was when everything else was like making highs, like Nvidia was up here and everyone was like, nah, you know, don't be in Google. And we're looking, you know, at price down here, and now look at it. So, you know, don't rule it out that Amazon can't just, you know, if we get some more crazy bullish price action, that Amazon won't be trading at 300 next year or later this year. You know, who knows? But overall, for an entire year, this is just building a base. This to me, it looks like a gigantic base, right? If I zoom out like this, look at the weekly time frame, right? It's not like it's an ugly, you know, that ugly of a chart. The ugly part, I guess, is, you know, MACD, you have these matching highs in a way. So if I were to structure this on a weekly time frame, you know, if I just were to say, I'm going to enter right now after a bullish day today, you know, the stop would be down here. So, you know, the stop would be minus, you know, 6%, which is pretty normal. And, you know, so if I structure the trade out, I'd have to be willing to lose about $12 a share. So if I said, hey, I'm okay with losing $1,200 on this position, right? Let's say if you trade a $100,000 portfolio. You trade a $100,000 portfolio and you're deciding to risk just 1.2% of it, which per trade, that's pretty high for most people. That, like, it doesn't seem like it's high, but if you're willing to risk minus 1.2%, first you got to find consistency in how you position size and all this stuff. But remember, in a lot of different names, in a lot of different setups, minus 1.2% per trade. That means if you have like 10 trades on and they all get stopped out because of a vol event, your portfolio loses 10% that day, right? So, and I know it's hard to like wrap this around your head, but because you see so many people having 100% years, 100% gains over the long course of time, that's not realistic, right? That's why the best traders in the world like typically average somewhere around 20% a year consistently. And that's with real money, right? Retail money, it's, you know, to get to those levels to actually make a living, you need gigantic portfolios. So people reach beyond their means. They shoot for these gigantic, you know, outsized returns and so forth. Realistically, you know, most people should only, you know, risk about 25 to 50 basis points a trade of their portfolio. So for example, you know, if you have a $100,000 portfolio, and if I risk that 1.2% of my portfolio, I'd be willing to risk, you know, $1,200, right? $1,200, right? So 1% would be, right, $1,000. 50 basis points would be $500, right? So I'd be risking $500. But now if my reward goes, you know, if it goes to 300, right, that'd be a pretty big, or, you know, positive. That means one trade, you know, from risking $500, I'm making, you know, 3,000 on it. You do that multiple times, you'd be surprised. So yeah, you know, minus 6% here. It's nothing too crazy. Just remember, if you want to make, you know, bigger gains, you're going to have to just know your position sizing strategy. I think that 1 to 2%, remind yourself, if you're risking 1 to 2% per trade of your entire portfolio, you're going to deal with more stress. You will. 1% is probably more manageable if you have more of an edge. So if anything happens, you know, if anything on one more thing on position sizing is you can start off saying like, you know, you can have a small, you know, medium and a large size position. And in order to get to a large position, say you want to do, risk 2% of your portfolio on a single trade, or just say 1.5, right? Or just say 1%, just say 1%. Let's be more realistic. Maybe you start off with a small position, right? You get a couple winners of the small position, then you can upgrade it to a medium position, and then you do a large. Because then at that point, if you lose a large position, you're probably still in the green. You could probably actually lose a couple large positions and still be break even if you built it up, right? So in that way, what you're trying to do is you're trying to put more weight. When you're on a winning streak, you're adding more to your portfolio. But when you're on a losing streak, say if you start losing, you drop back down to a small or a medium-sized position. So when you're losing, you're going to start losing less. When you're winning and on a streak, you start winning more, right? Instead of when you're losing, people tend to add more and bigger sizes, which hurts you. I went on a tangent. Can I export my layout? I don't know how to. If I export my layout, but if I had some indicators on here, what happens then? The indicators wouldn't even show up on your screen, I don't think. Right? I don't know what I don't know. I mean, I don't mind sharing it. I've shared it before. I don't remember how I did it though. Let me see. I think I maybe shared it on Patreon. Let me see if it's on it. Okay, so there is Amazon. Meta was a trade idea too on this little wedge pattern. Hasn't really gone anywhere. This one's below a declining 50-day. The 20-day is still declining. Not my favorite look, and you have earnings right around the corner. So, if you manage to take this trade, you're in the green. So awesome. Maybe update your stop to this swing low versus this swing low. Yeah, so it's only a smaller loss, and if you want to keep it going. I could have sworn that I posted my... win percentage rates are always going to change. I wouldn't really worry too much about the win percentage rate, but if you're like, especially with the risk, so you want to be able to, some of the bigger traders, they literally legitimately have like a 40% win rate. And that's a better position to be in, to be able to make money with a 40% win rate. I posted a video, Nathan, about like all the math behind this. It's a great video if you take time to just kind of, hey, thanks, Euro Trades. If you watch it, because I kind of break down various scenarios on that. The win rate, like for example, right, I look for names that are contracting and then I play the breakout. Here's, the risk. And then obviously the reward, can go 2 or 3. But the thing is, you probably are not going to just hold it for a 3R reward and keep your stop down here, because your risk to reward gets skewed as price goes in your favor. So if all of a sudden you're right here and your reward level, your target is there and your stop's still down here, that means now your reward is this much left and your risk is now this. So you got to update stops, right? So you're going to have like more less than break-even trades. You're going to have some that, just go 1-to-1. And every once in a while, you might update your stop or take partial profits and you just let the thing go. And it just keeps going and going. Like, for example, LEU was a trade that I took down here. This was, another trade idea within kind of the oil space. And look at the risk. This was my risk. That was my risk right here. Look how tiny it is. And I swear to you, I was looking at this. I was getting ready to re-enter, and or not re-enter. Actually, technically re-enter, because I took some profit here, and I was trying to add back in over here, and I kind of just forgot about it and decided not to. And I held on to the entire position to this day, I believe, right here. No, I posted it on Twitter. I can't remember what day. It was this day, or let's just call it this day. I think it was this day. The remaining position all the way to this day. So this, the last part of my position went over 100%. It was like 130%. But I didn't keep the full size all the way this way, right? I scaled out, I moved my stop up, and so forth. So just know it's always going to kind of alter the win rate. It's going to be confusing. People shoot for these high win rates, and look at a high win rate is probably, I'd be very skeptical of high win rates. And I know this for a fact because if you have a high win rate, it means you're taking profits too fast, right? You don't want anything to go against you. And that means if something goes against you, also with a high win rate, you might not want to ruin this win rate. So you buy more into it and you try to drive price down. And then all of a sudden you're risking way more. And then it takes one bad trade to just wipe you out completely. Too many traders blow up at a 90% win rate. Too many. You'll see less blowups take place if you build your foundation off a 30% win rate or a 40% win rate. And then, I mean, to be honest, once you have edge, your win rate's going to go up from there. You're going to probably have times where you're like 60, 70% win rate, right? There's been times where I have like 100% win rate. It's crazy. And then all of a sudden it just like plays out amazing. And then you get a benefit with all of that. And those are just market conditions, right? Once you understand like you're in a better market conditions and you start and you go from there. So I wouldn't just, win rate is probably the most worthless metric when it comes to trading. It really is, right? And here's another reason why win rate sucks is I can give you my entries, my exits on say 10 trades, right? 10 trades, but I don't tell you anything about my position sizing. Our outcome is going to be completely different because you might see, hey, he just had 6 trades in a row that are right. This guy's, six trades right in a row. He's doing hecka good. But I didn't take the last, these, couple of trades, or I went small. Now on the next one, I'm going to go really big because he's amazing. And then you oversize the position, and that's one of my losers, right? So our outcome ends up being completely different. So we both had a 9, say if I got 9 out of 10 trades right there, my outcome is pretty fine. But yet you have another trader that took the same trades and blows up. And that's why alert services are pointless, right? If you've copied trades from somebody else, like here's my entry, here's my exit, it's pointless. 100% pointless. Like unless if you have some sort of position sizing strategy and edge and you're just utilizing, to get, other looks on the market. But if you don't understand all the trades that they're taking, like, right, if they're taking an oil trade that makes 0 sense, it could make sense to them because their portfolio is actually, it makes sense to take on some sort of negative correlation to their portfolio as a potential hedge, or it makes sense to protect something in some sort of a way. It's a fine line. I'm still by the way, looking for that FOM, the little setup here on this so I can share it, but I didn't see it. So many posts that I made. Tell you what, win rate, if you get good at losing, you'll probably be significantly better. Well, let me see here. Oh, hey, I found it. I think this is it. So who asked me? Was that on Twitch or was that on X? Who asked me for my Thinkorswim setup? Where you at? Huh. All right, well, if you want my Thinkorswim, how do I post it? If you want my Thinkorswim setup, I think it's this. So I posted on YouTube. You don't click the link. You have to copy the link. For those that use Thinkorswim, that link doesn't lead to anything, well, other than Thinkorswim page. But you got to go into like your setup, and then you have to go to like open shared item, and I think that's it. I think that gives you kind of my setup on okay. Sorry, it was in Twitch. There you go. Give that a shot, and Hawk. It's been a long time since I posted that. And you can make your adjustments yourself and put your own indicators and stuff on there. So that one's old. I don't know if I changed it much, but that should be the 4 windows. It was called How I Quickly Analyze Stocks Using Multiple Time Frames. Actually, I don't know if this video is free. This video might be free on Patreon. So I'm going to go ahead and post it on there too. So you can take a look and see if it's one of the free posts. I don't know if it is or not. If it isn't, I can make it free. Let me see here. Oh, it is locked. Let me see if I can unlock it. Edit post. I'll make this one free access. There you go. You can watch the video now. No, I don't need it. Notify. There you go. So now you can watch how I do it. Like I said, this was done in 2021, but not much has changed from my stuff. So has the AI thing created? No, I think it's still red. I think it's still red. Yeah, it's still red. This, I mean, it was the same thing here, right? And then it kind of went down, it went up, and went flying, and went higher. New all-time highs, then we went into some selling. But the market's bullish. So, you know, I won't put too much weight on this on the upside move or the red portion, but I do like it when we start getting the green and start buying, because then I will match it with like follow through days and some other stuff, which bottoms are typically easier to find and spot than market tops. Market tops go through distribution that can be pretty difficult to navigate. But, you know, this market, it kind of just dragged higher, and then bam, one single day, it brought us basically right back to it. I mean, this was the last day that it was green. So if you just go right across, you know, we're up, you know, about 2%, and now it's a little bit higher there. Let's see. But also to note, Chris, I'm not much of a short seller. And if I'm shorting, it's like typically like a parabolic move I'm shorting, or, you know, some crazy sell side activity that I'm fading the other direction. Okay. So we talked about a lot. Let me go back over here to some of these mega cap names. We saw Meta, AVGO. This is just still consolidating. I mean, these crazy moves in these semiconductors. Holy moly, man. These things are wild. Semiconductors. You know, it's crazy. Like, what you can like put money on, like, you know, this is going to happen, is you're going to go through like a 20% plus drawdown in semiconductors. You will. It's going to happen again. It happens all the time, right? So, you know, 20%. That was a 50% drawdown. That's crazy. This was, you know, this year 32% right over here, right? In fact, I mean, let me just show you my point here. If I can get my drawing tool to work. Come on. It works over here. Why does it do that? I think it's going to be... Okay, so here was a 30% drawdown this year. Okay, this year, the year prior, 27%. This year, right over here, 17%, 15 to 17% drawdown there. This year, the year prior, you know, obviously 45%. This year, over here, the following year, minus 17, minus, you know, 20-ish%. Okay, so each year, every year so far in the last, you know, what I'm looking at, 5 years here, went through about a 20% drawdown. Short it? Joking. So my point is, if you get a 20% drawdown almost every year, you're probably going to get it again, right? And the reason why I say that is not to short it right now. That's not what I'm saying. But my point is, you don't know when that's going to happen, but you do know that it's going to happen. So what does that mean? The only thing that it means is you can only control the risk. So the setup has to make sense. And if it doesn't work out, get out. So if I think that, you know, going long semiconductors right now is a good idea, which in hindsight, it might be a great idea. Where would be an ideal stop? right? Well, in this case, because all we can look at is what we have here, right? An ideal stop would probably be under this low if I'm trying to hold it, right? Hey, you know what? This low hasn't getting taken out. I think we're going to have a bullish into Christmas and, into New Year. I'm going to buy it right now at all-time highs. Yeah, sure, it's going to consolidate and maybe pull back and so forth. But I'm going to stay, my stop's going to remain here. And if it goes up in my favor, I'll update my stop. I'll update it and so forth. Okay. But if all of a sudden a 20% drawdown comes, into the end of the year and it goes up a little bit and then bam, make sure you're honoring your stops. Now, if I look at the weekly time frame and I look at this, I'm like, is right now the best time to buy a new position? Probably not the best time because we haven't had any real consolidation, right? Now, would it be the best time to short? Probably not, right? In hindsight, it might be. But the reason why I say it's probably not is because what if you shorted this all-time high or this all-time high or this all-time high or this all-time high or this one or this one or this one or this one, right? So you need the proper setups. Now, when I short, right, if I were to short, like if I were to enter a short right now, right, it would be like, hey, if the next day it's down 2%, like I'm probably going to be taking my profits because that's just how I short. So for short sellers, if you're like, yeah, I think it's going to crack down 20%, I want to catch the move, and I think that maybe upside we have maybe 5 to 10%, but I'm looking for a 20% drawdown. Okay, then what you do here is short selling is more difficult. Short selling, you can lose an infinite amount of money if you're not careful. So you typically, whatever your full size position is for going long, you just want to cut that into half, divide it by 2. Don't go big on short selling, and then don't go all in at once. So technically, you're doing a small position, and then maybe you might build into it for a dramatic day or a dramatic hit. Right? That approach will save you versus going too heavy, too fast. Because if you look back through the history of all your setups and stuff, you'll probably notice that very rarely, maybe 0.5% of the time, that you nail the entry to be the perfect tick. Like it doesn't go against you at all, right? Most trades that you're going to take, 80% of them, right? 80, 90, 95%, they're not going to just go right in your favor right away. You're going to have to deal with a little pullback consolidation or it just stays flat, right? So what's the rush to enter knowing the data suggests that you're not going to have the best entry? So people get tied up on entries so frequently, right? Maybe it makes more sense for a scalper, but for a swing trader, you can start small and then give it room to breathe and you can add when it makes sense to. Too fat, too furious. Yeah, exactly. You go too fat, too fast. We'll look at coin. Let's see here. I'll touch on Tesla really quick. Tesla still looks good. So for example, Tesla consolidating, right? This was on the video that I posted the other day of a potential, I'd say it looks good. It looks like it wants to go to 500 and retest these highs. How it gets there, I don't know. We have earnings. What is earnings? Is earnings today? No, tomorrow. Okay. So tomorrow you're looking at an expected move of $33 for earnings. So, I mean, this thing could be up. Yeah, this thing could be at all-time highs tomorrow, after the bell on earnings. It could be at all-time highs, or it could be, back down to the 50-day moving average. That's the risk going into tomorrow's earnings. Now, to me, this looks bullish. Earnings, it's a coin flip. I don't know what earnings is going to do. All I do know is what the market's going to price in for risk, and right now it's about $33 based off of the current price where it's at. So I don't know where it's going to be tomorrow going into earnings, and that's what matters the most. So I would be bullish leaning, right? So if you're in a position, say if you played this position over here and you caught it, or if you're even over here, let's just say from here, and you're in it and you're up all this, the only question that you need to ask yourself at this point is, am I willing to lose $33 a share on this position? Am I willing to let it go from where it is right now down to here, And that's just a 1 standard deviation move, right? It could be 2 standard deviations, but am I willing to risk at minimum $33? Because the high probability is that it's going to move $33. So that's about 10%. I mean, if you entered here and you're up here, you can do, if you're like, I don't want to lose that. but I don't want to get rid of my position. So what would you do? You would trim your position. You would take a little bit off and then let earnings play out. And if it goes in your favor, you get to keep and have some of those winnings. And then if it consolidates and sets back up, you can always add back in on a breakout when risk makes sense, right? And if it comes back down and you're like, sweet, awesome, I saved some money, I locked in some capital. Now I want to see what it does because I might still even enter back in or redeploy that capital. You say SPY and Qs is selling off. Probably because we hit one of these kind of main 0 DTE levels, which is 6750 on a gamma perspective. So SPX is 6750. We tagged that. So you're running into a little bit of resistance here. SPY came down to what? It came down to the week to date VWAP. Right? We're just traveling there. So it's coming in a little bit. Overall though, I mean, we're still flat, unchanged on the day. I will note that the as far as intraday goes, market net flow, it's pretty bearish. So this, look at how this kind of divergence between the cumulative net premiums for puts and calls are separating. It's getting a bigger divergence, and you do have convergence, so price action's moving with it. So it's not the cleanest look right there at all. So if we start breaking down, I keep the door. I mean, the door can be open, but right now this is just some sideways price action. Wouldn't get too caught up on that one yet at the moment. I can pull up the news and just see if news has been coming out. Let me listen to this. So we'll have OpenAI confirms early reports that's launching ChatGPT. Netflix says Mattel Hasbro has been named global co-master. K-pop Demon Hunters. Oh, that's actually interesting. Because these setups, and look at that. Yeah, it's breaking above its year-to-date VWAP there. I want to look. So it was Mattel, and what else was the other one? Hasbro. These charts were looking pretty good at a time. Hasbro. I mean, shoot, it doesn't even look that bad. It is. Earnings are right around the corner. That could be quite beneficial. These toy companies, you know, it's pretty interesting news. The reason why I say it's interesting with the K-pop Demon Hunters is because the popularity of it. Think through this. You know, the popularity of Demon Hunters, the Netflix show, and this music. A lot of kids might want toys, and we are coming into the holiday season, and so forth. So those could be some popular items, which can drive, you know, things like Mattel, Hasbro, or at least can drive order flow, and you know. Those type of things happen. Markets try to front run stuff. Google's now down 3% on the trading session. That was a big hit on Google. Look at this. So if you're wondering why the SPY took a hit, I mean, Google is definitely driving that. Netflix down, or sorry, Nvidia down 66 basis points, nothing. But that move right there in Google was pretty dramatic earlier here. Bam. Quite a bit of volume on the way down here. That's trading outside of its daily kind of range. But if you look at the daily time frame, I mean, so it doesn't really matter right now. PCT still consolidating. Yeah, I still have a position in PCT. This one's down 5% today. It was up 10% yesterday or something like that. The percentages are going to throw people on PCT because, you know, you move this much and it's like, oh my gosh, it's down 5% or 10%. That's why you got to look at kind of the weekly time frame and just like zoom in over here. It hasn't gone anywhere for like multiple weeks, but it's been consolidating. I would say one thing to watch out for is just these kind of higher tails keep on kind of stepping in, right? So as we're trying to break up into these areas, sellers kind of keep stepping in. So maybe we get some sort of flush and then it tries to pick itself back up. Maybe it just breaks down. I don't know. But one thing is, if you go too heavy on a high beta name like this, which, by the way, this is a crazy beta. So look at SPY. It's flat on the day, or it's up 6 basis points. You know, PCT, right, is down 4.5. So you're talking a pretty high beta name. But still, yeah, I mean, I would say this is just consolidating, getting quite choppy in and around here, which can lead to shakeouts, breakdowns, and so forth. If it breaks down from here, I don't even know. My position is kind of small, so I might not even. If I do get out, I would be looking maybe at year-to-date VWAP and see what it does from that point. I don't want it really underneath there, and then I can always re-enter if it shows strength. but the probability of kind of getting stopped from here to there is kind of high. It'd be like a single day. But yeah, overall weekly time frame is just going sideways right now, consolidating. Silver down. Yeah, silver's down 8%. And gold's down 6%. Yeah, crazy moves. Pretty big weekly reversal. I want to take a look at GDX again. It didn't really break down from here. It still feels like it can break lower. If we get a dramatic move in GDX, like further break to the downside, I'd be interested in potentially just taking a fade trade. But I don't like fading this type of move because it's like didn't go straight down, right? It's just going like this, putting in lower highs. Blip, 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 blip. I ain't trying to fade it right here and then crack down lower and try to chase the dang thing. No, thank you. I'm good. Hack coin. Yeah, we'll take a look at hack and coin. Let's see here. Hack. Yeah, hack looks good. Going through its consolidation. All right, so you have these higher lows. So basically, if this low is taken out, I'd probably be a little bit more cautious, but it's fine right now. Cybersecurity. Coin. Not given much here. Hasn't really gone much anywhere for a minute. It's really kind of choppy and sloppy, but if I zoom in here, you did have this pretty nice reversal candle over here. But if I look at that, it was on higher volume too. I guess that's nice. So if I were to enter coin, the trade idea is set up for this one particularly. You do have earnings around the corner like most of these. But if I were to say, I'm going to adjust my risk to have a stop down here, so I'd have to be willing to lose, 8% or whatever, $24 per share. The idea would be coming back up into here, 12%, maybe even new highs, 20%. But I would say probably more realistically, 12%, 7%. So still a better than one-to-one. So you're playing basically this reversal candle, you're stopping. If it does start to break out further here, you can always update your stop to this low. Say if it just automatically goes, and then you just adjust up. Or take partial profits and let the rest go. Another thing you can do is anchor a VWAP to this reversal day. So if I were to go into, let's go into side by side. And I'll go into coin. Yeah, so I'm going to go ahead and anchor in a VWAP right here. Look at this. So if you were trying to be like more strategic and you're like, I think I'm going to enter right now, but I want to do it from a, more strategically, you might say, okay, if it breaks through, this little level here, or this prior, lower high, I'm going to have a stop down here, right? Which is 342 to 335. So a lot tighter, which means your probabilities of getting stopped out, but you're adjusting it based off of, we had a nice reversal over here. Now, this was our first initial test of that VWAP from that low. And then, right, you can always anchor a VWAP to the high and say, I think it's going to play it up to this high over here. Oops, what did I just do? There we go. So let me do this. A couple other things you can do. So there's this swing high. So it actually held, and then this was the first test, and then it got rejected from there. So you might actually say, okay, the volume weighted average price from this high to this low, which on the daily time frame, that's this candle and this candle. Price is right in the middle of it, right? So consolidating is what this is. It's consolidating. What you could do is say, okay, if price were to come and doodle up in here and then break out, my stop is going to go under this VWAP down here, this swing low VWAP. So you're basically saying, I'm going to play the strength. And if it comes up here, your 5-day moving average is going to be flattening out and turning up. Right now, it's not. It's still trending down as price action is below it. So you need, if you enter now, you're basically saying, I'm speculating before the market's proven itself. Because the market's not proven itself. Price has not proven itself to be in a bullish trend right now. Not here. Right? Why? Because the 5-day moving average is still declining, which this is synthetic 5-day moving average. But, that'd be the more strategic way to set up the trade for like zooming in using multiple, time frames. IYT. Bull is a lot of options flow. Yeah, bull. Yeah, I looked at this once, and I think I traded it over here for a breakout of this year-to-date VWAP, and then it rejected and then came down. So at minimum, I got out at a loss over here somewhere. If I can't really recall. I'm just going to say that I took a loss on that, but I can't remember. And then now it's below all these averages. Yeah, I mean, it's getting tight here. So you might see a little pop, but like, okay, if it pops, then what? Like, are you playing it to like way up here to get through all these averages? You're going to hold through all the chop, all that stuff. And then where's your stop going to go? Like, so the stop, if it's to say, if it's just this low of this candle, that's minus 4%. And the probability of getting stopped out here is pretty high because, 4% down, this thing moves more than 4% every single day, basically.
And just one to be aware of, US Secretary of State Rubio does plan to travel to Israel later this week or over the weekend, according to Axios, citing US and Israeli officials.
So you got to probably play small, and then when it pop, if it were to pop and you get, in the green, like you just got to pretty much update stops because of the trend of it overall. The reason I say that is because throughout time, if you do this same trade where you just take bearish setups bullishly, right? Bearish trends, but you take bullish setups. If you do that over time, you're going to have higher probabilities of more of them going against you. So the time that you get caught up in one of them could be bad, could be very bad. So you got to just protect yourself on all fronts. So when I take trades like this, if I was to say, yeah, I'm going to go long, it's going to be my position size is going to be based off of what's the trend like, what's the setup like. The setup's not great, and the trend is not great. So my position size, I still want to take it, but position size is going to dramatically change given the context of what I just said. Then if I'm wrong, who cares? I get out and I take a smaller hit. And if I'm right, awesome, cool. I made a little bit extra money. I'm not married to the stock. It's inventory. I get in, get out, get on with life. AVDL. People have been mentioning AVDL. I don't know what that is. Let me pull this one up again. I keep on. Sounds familiar.
$5.9 billion across 9.
Yeah. So AVDL, nice pop today. There you go. Plus 8%. Yeah. Okay. Cool. I wouldn't enter new positions up here, even though that bullish moves like this typically can get follow through. But now you look for consolidations and so forth. But nice. I don't know if this was news driven or just flow driven. Do we look at we can look at team. Please don't flush PCT. Can we look at team? Yeah, we'll look at team. We'll look at DKNG. Yeah. Team. Once again, bearish trend. Nice seeing a nice little bounce a little bit here. But remember, the 200 is still declining. Year to date's declining. 50 days flattening out to declining. 20 days declining. So you're going to be fighting a trend. Think of this. If you enter right now, right? Yeah, it can go up, right? It can. Just like if you were to jump into a river and try to swim upstream, you can go up. You can, but you're going to get exhausted faster. And that's what this is. Price is going to get exhausted faster, and then it's going to take some time to consolidate. And sometimes, right, if it consolidates, like those could be some of the more better times to enter, even if it's even at a more expensive price. Because it offers a better risk to reward and better, probabilities. But yeah, trend, not good. Will it retouch this year-to-date VWAP? I mean, probably. Probably at some point. You have earnings right around the corner. It hasn't really tagged it at all, so to come up there, yeah, might make sense. ALNT. A lot of volume on this one. Yeah, this one broke out. This one looks a lot more familiar. Bullish trend, rising 20, rising 50, rising VWAP, rising 200. Broke out, came to back test, seen some strength. So for me on this, like because I don't have a position, obviously, right? I don't like just entering for the sake of entering right now as we're seeing this strength. Now, after this pullback, it's been what? A couple of days, 3 days. So for me, I would prefer to see it come up and do like consolidate a little bit more, like 7 to 10 trading days. And then it offers up like, okay, now, or even like, something like that. Then I'm seeing more consolidation, more rest taking place. And it gives, if you look at this volume, this was a nice volume breakout, right? That's a pretty solid breakout on good volume. And if it comes up and starts pulling back or digesting and volume starts to dry up and kind of go non-existent, that's also pretty nice. Now, remember, it's always important to look at volume. And if you look at the volume here, it's pretty illiquid for the most part. You're talking a couple 100,000 shares. You know, this day was a big day, 500,000, and it's a $51 product. So it's not like it's a super liquid product. Like, look at the daily intraday time frame. So just make sure you're paying attention to the bid spread, right? Because if you put in a market order, you got 55 to 82. It's a pretty wide spread. So if you go sizable in this, you can move it, right? Or you can get bad fills. So just keep that in mind too. Did I ever cover any rare earth stuff? Maybe some of them showed up on my scanners, but I didn't today. I haven't gone everything like what is it? MP is like a rare earth, right? Or materials. What's some other ones? We can always pull those up. It wasn't like CLF had some crazy moves. Yeah, look at that. Jeez. Yeesh. Cleveland Cliffs. Isn't that steel? I could have sworn there was some news around there. DKNG. Pull up DKNG. I'd be confident. So somebody had mentioned it down here or something like that, and I said I'd be careful with DKNG because they're a sports betting app, and isn't Hood building that into their platform now? And if so, I mean, Hood's huge, and they, could definitely take market share away from something like DraftKings. DraftKings is big, but I mean, whenever that news came out, we should look when that news came out that Hood was going to start integrating it or did integrate it or something like that. I'm talking off the top of my head. I can't quite recall if that's truth, but I feel like it was. Like I heard it. So we got to always verify and double check. But if that came out like this day or something like around here, and then it took a beating like this, that could be foretelling. It's like, remember what happened to Blockbuster stock? When Netflix came out, that was like the top. That was the top of Blockbuster when Netflix came out. Nobody knew what Netflix was really, right? Why would you rent your DVDs? Why would you mail it to? When you could just go into the store and down and down and down the world fell, right?
And just of note here for Petrobras PD.
Not to say that it's going to be the same situation, but if I look up Hood, look at this chart. And they're doing predictive markets too.
They have at least 5 more wells in the licensing process, in addition to the Pioneer well.
So yeah, there's going to be pops in names like DKNG, but just understand that it's below 20, that's declining, 50, that's declining, 200, that's flat to declining, but a low year-to-date VWAP, yeah, you're going to have bounces. It's consolidating. You're going to have bounces. You will. You'll see it, but just be aware of these big volume breaks, and if you see that, make sure that your position sizing makes sense, right? Take that in. It's a factor that goes into your, it's a factor that you can't ignore. DAL, this looks pretty good. Who mentioned that? Ibrahim? I want to look at your circle. Okay. Okay. You got a decent eye there. I'll say you got a pretty decent eye. That's those are good. Those are pretty good consolidations there, Ibrahim. So DAL, I mean, this looks pretty good. You got earnings out of the way. It was bullish, right? Bullish reaction. It came in. It's above a 50, 20, 200's flat. But I mean, look at this. Pretty nice consolidation. Looks like it wants to break out here. Like this could be an early entry to go retest these highs up at around 70. You have a stop down here, a stop down here. Even a stop down here to start, like if you adjust your position for this kind of a loss, I mean, that's a 1-for-1 still just to retest these highs. Nice, nice. You'd mentioned Circle. Circle is not as clean as a trend, but I will say that you still have a nice, you still consolidating here. So for this one, I would want it to prove itself. And if I want to get in early, it has to be tiny because this thing could snap right through there and in a moment's notice. But like, say if it was like this, I'd be like, oh yeah, it's probably going to go test year-to-date VWAP right away. So if it proves itself, if I go into a smaller time frame, comes through here, 5 days starts turning back up, then I have some more idea of like, okay, this can get going here. I'm not proving to the market that I'm correct. I'm just letting the market prove itself to me. BYND doing some wild stuff. Yeah, they're not going to let BYND kind of die. This makes sense. You get these bankrupt companies, and then you get short squeezes back up. You got news that came out that they're not going to let die. So it was up 100+%. Now it's up 80% today. Once again, I don't chase these moves. I don't really care about these things. There was times where I said, yeah, I've traded. I even had like a YouTube short of it because it was setting up a lot better. And that thing, it went up like 100% on earnings. It was just getting ready for a short squeeze. These are heavily shorted names. So for something like this, if we're going to continue on, like look for the consolidations and so forth, or use it to be a stock that's in play where you can trade it intraday, right? You can trade these things intraday. So for example, like if I was looking at this earlier from an intraday perspective, and I was like, okay, it consolidated right above your VWAP here. Yeah, it looks like it can go retest those highs. It did, right? Obviously, in hindsight, that's easy. Then we consolidated here. We started breaking out. Awesome. Would I enter right here? No, right? But hey, maybe if it pulls back in and starts doodling around, this VWAP kind of starts coming back in. Maybe it does create some sort of a play where it offers a better risk to reward later on to pop up for, a continuation of the squeeze. But, it's up 80%, so... You gotta, if you're doing that intraday and using it for a stock in play, just manage that risk because things can get away fast. Oh, nice, Ibrahim. USAR. Let's see here. Coco, stop. Rare Earth. Okay, so Rare Earth. Give me a second. Coco, come here. Somebody in my house? Who's in my house? Give me a second, sorry. Oh, my wife's doing some. Okay, USAR. Pretty big pullback. Pretty big pullback here. These are some crazy squeezes. So yeah, on names like this, you're like I said, you're pulling back into a rising 20. I want to see strength, and I want to see consolidations. And right now, it's doing the pullback, but it's still below a declining 5-day. It's getting outside of its kind of value area over here, so a little bit lower. Maybe perhaps it does offer up little bounces where it can be a in play type of name. But some of these are just kind of blowing off quite a bit of steam after these big rallies. So it seems like it's more kind of like a cyclical news story headline driven, and then bam, they start moving, right? So when that's the case, these things can really get going, but you got to wait for, proper consolidations. And if I was to say, okay, this is the consolidation, where am I going to enter? Where's my stop? All right, where's my stop going to be here? It's right here. What is my stop going to go right here? 1 centimeter away, maybe. And it might be the perfect entry because this thing might close up here today. And then maybe it breaks through this high and then we start to see a bounce and it ends up being perfect. But just know that if you don't get out here and then it stops out and then it just snaps back down even further or comes down to the year-to-date VWAP, guess what? Like you're in the hole there. As far as daily implied moves, it's outside of that. So it's kind of just drowning, kind of just towards these lows. So all factors that you got to take into consideration if you're entering it in. CRM, I think I did a CRM. Was a CRM that I had looked at already? No, CRM looked pretty good though. This one was on my radar for a retest of the year-to-date VWAP. And give me a second. Coco, get over here. Coco wants to say hi. Coco the bear. All right. Come here. So this one's looks good, but just know if you're once again if you're entering now, you're going up against a declining year-to-date VWAP. The last time we were there, it got rejected. right? So price action coiled up here, which kind of is why it was on my radar, and then we broke out, nice pop. So in my situation here, this would be the risk area here, and I could come back in. So if it consolidates, does this and starts to break above it, then that might open the gates for a nice move here in Salesforce. Did anyone see a shot collar? I can't even fit a collar around Coco. Shot collars wouldn't work. Some food. She got some food. Got some food and water. Needs some better food. Lulu. I missed this one too. I was kind of eyeballing this the other day. This one was just in this down channel and it looked like it was about to break through. I like the little consolidation here. Once again, it would be one of those things, if you played it, you'd have a stop down here and see if it kind of gains some steam to come back up. But once again, it's in a bearish trend. And then it started breaking this. So all factors, once again, to take into consideration. So my thought was that can we come up to back to and around 220 to potentially around that year-to-date VWAP. So right around these areas. I didn't take a position. I forgot it. It got off my radar. I didn't set the alert. Let's see here. The shot collar joke is going around. Is that a joke right now? A shot collar thing? I didn't know. I didn't know. RMBS. Yeah, that has earnings right around the corner, so it'll probably consolidate a bit. But yeah, that's a nice consolidation there too. Fortunately, earnings is going to play out before I can enter. HIMS. I had a position in HIMS. I'm already out of the position. I was looking at it over here and then over here to see if it could do a trend break, and it didn't. So I'm out of the position for HIMS. I really like the setup on this, but now it's getting weak, so I get out. But I'm not much of a fan of trading these type of names, especially I don't know, something's off about the CEO in my opinion, and I just feel like something's shady with this company. But then again, when price breaks, you can make some pretty big gains. So I was looking at this breakout over here, and then it kind of sat back in. I was fine with, and then under the low there, I was out. And now if it sets back up, if it comes back in and sets back up, maybe I'll take another try at it. But I do like the overall base for the entire year. But the fake breakout and then the breakdown here, I'm not really interested to get into all of that. Oh, a Twitch streamer is under fire for using a shot collar on the puppy, but it's not a true story. Oh, okay, I gotcha. ARM, so crowds are ARM. Let's see, ARM. I think ARM was a trade idea over here, right into the VWAP of the year to date. This looks good. I mean, you can't say that looks ugly. You get all this volume on the way up, and it's kind of consolidating up here. I wouldn't be surprised if it takes out its year-to-date high. I mean, we're right there. The longer the consolidation, the better for me. You go back further, look at this. Look at ARM. So it ran into supply here, ran into supply there, ran into supply again. But it's above a rising 10 week, 30 weeks rising, 40 weeks up here.
And according to Bloomberg, the Trump admin backs effort for US-Kazakhstan tungsten mine deal.
Earnings
the US
soon,
can provide
yeah.
debt financing for access to Kazakh's tungsten.
Lift. Yeah, Lyft is also doing pretty good. Doing pretty good. This is a pretty big break over here. Whatever. All right, let's see if it can consolidate longer. Set up for an early entry to come back into these areas. All right. It's kind of going through its consolidation. I don't want this to be an exhaustion gap where it exhausts, boom, breaks down, and then heads lower. Sometimes that can lead to exhaustion gaps, but overall it's kind of holding this prior high over here. All right, I draw it like that. This prior high over here, and it's kind of holding. So Sometimes it goes sideways for a while or up and then down. You can get early entries back into these prior highs. Kind of like how Microsoft is setting up now, right? Microsoft, had this exhaustion type gap, and then it's, doing its sideways price action, and potentially you can be an early entry to get up here, but you got to just manage risk. It's kind of similar situation there. Gold, gold is down today. I mean, this is pulling back from an all-time high. I'm not surprised. So there's literally not much going on there. Still bullish context, and you're going to deal with volatility. This is what happens on, crazy rises. You're going to have crazy, scary down days. Did miners bounce? I didn't watch it. So miners did crack lower, and then it's right back up at that level. Didn't go far enough. Let's keep an eye on that. MGC Z25. Yeah, that's just gold. Okay. Micro E-minis. Trading gold futures. Yeah, I mean, look at it's basically straight down. You're going to get a bounce probably, right? So you have on the 15-minute time frame, your price momentum oscillator is starting to curl a little bit. You have a positive divergence here. Yeah, come back up to 4150, maybe this volume node over here, and if it wants to go up higher, maybe 4200. I mean, would you be shocked if it goes up to right around 4200 again? Absolutely not. I wouldn't be shocked if it goes to all-time highs again. So, okay, you break down, bam, flushes people take profits, you get these exaggerated moves, come back up. All right. Got to manage risk though, because order flow today, it's been very, very bearish, right? It's just been crazy bearish. So, and in the futures market or the future space, if you're trading this, like that's like highly leveraged, right? Highly leveraged products. So you got to know when to get out, or maybe below the low of this candle or the low of this candle. So set it up properly, because that's the big break. Got a big break there. And big breaks like this, right? Big moves to the upside typically get big moves to the downside. Big moves to the downside typically follow through some big moves to the upside. We talked about this. Actually, if you watch the market brief that we posted for this specific day, I pulled up a rate of change chart that shows you specifically the last time that we saw a rate of change move of this magnitude, which was 2.8%. And everything, the only thing in common with it when you have these big down days is they're shortly followed by big moves to the upside. And the very next day, up 1.52%, right? This is reflexivity. Grab. Oh yeah, I liked Grab. I traded Grab over here. Once again, Grab. Look at the risk. It was like nothing, and then it boom, right? Every once in a while, you're going to catch a monster mover. Now, actually, Grab does look good. Grab looks good because look at where it's pulling back into. All right, there we go. Grab broke out, kind of pulled in, saw another retest of this high. That could be considered a double top. If that's a double top, measured moves of these things would be lower technically. It would be more down here to year to date. But let's say it's pulling into an inclining 50-day. It's technically price action is kind of coiling up here. And then look at volume. Volume on the way up was huge. And then now it's been drying up. So for me, if I look at this, I'm like, that's a pretty good looking chart. It's setting up again. This was a crazy trade. But look at the risk, right? So the risk here was just made sense, right? You start breaking out, bam, your stop is down here, right into these key averages. And look at that thing go. Now it might make sense again. All right, you're pulling into the rising 50, right? Volume's drying up. It's pulling back into this prior area. It hasn't showed itself strength yet. Hasn't proven itself yet, but not a bad look. Let's go to the weekly chart. All right, this is a big base in a potential markup phase. So this is all accumulation over here. Bam, you break out 30 weeks up, 40 weeks up, 10 weeks up, right? Then you're basing out, it's set up again right into those averages. Bam, and now we're pulling back again. So it'd be nice to see the 30-week and 40-week catch up a little bit here. And this is just a pullback into potentially a bigger uptrend. Sure. I mean, that's a good-looking weekly chart, base breakout in an early markup, potential for early markup phase. Because remember, markets move between 4 stages. You have accumulation, you get markup, decline, distribution, decline. And if you're catching the early stages of a markup, right? This is the accumulation, and this is the early stages of the markup phase. You're going to have like pullbacks and whatever. But the idea is to catch this into a period of distribution. And distribution, I mean, distribution, when you see it, it looks clear as day. You just don't know if it's distribution or not. Like, for example, ARC over here. Let's go time frame. This was a clear markup phase, and then look at this distribution. Like, this is clear as day. You get this blow-off move. It pulls back in. You get super volatile swings back and forth, and then bam, it goes into a decline phase. It's literally picture book of accumulation, markup, distribution, decline. Then, right, there's been many times where you say, oh, this accumulation, you get a pullback, shake out over here, but then it reset back up. And we were looking at that back then. Look at, I think I posted this on Trade Ideas on this day. And then, I don't know about over here, but it reset back up. Even over here, it reset back up. Then you start to look for those. So yeah, grab looks good. Still below declining 5 days. So yeah, it got to prove itself right now. But we're near that approval. Somebody had mentioned Pfizer. I think I talked about this on the last brief, or I talked about Pfizer or Merck or something like that, or a couple of these names. Yeah, I mean, a very similar look to a lot of the names that we talked about. So PFE, I mean, we're breaking that steep trend line. Merck, right? That was pretty clean. BIIB was pretty clean, right? Nice pullback. Like, look at how they all kind of look similar.
Just some comments from journalist
Mercedes-Benz.
Says it's closely monitoring developments on Nexperia and are in contact with relevant stakeholders.
Reddit, RDTT. Yeah, Reddit's just kind of consolidating here. This is a pretty tricky area for Reddit because when you start to expand, see how we're getting kind of two-directional moves. So, if you played Reddit, you play the breakout of this line over here. Okay, cool, you're still in it. Now your stop would be under this low. But if you were in early, your stop would probably have been under here, which would have stopped you out. So you'd have to look to re-enter on a name like this. So yeah, it's consolidating. It's going sideways after some pretty big distribution, more to the downside. So it's a little choppy, a little sloppy. At least right now. Oh yeah, coin. I forgot about coin. We were looking at coin, and this kind of setup is kind of nice. Kind of want to set up an alert just at this. No, I don't need an alert. I'm good. I want to go back over to SPY. Where are we? Flat, holding up at that week-to-date VWAP, and we have 3 candles of consolidation here. Market net flow. The divergence was growing. Now it's kind of come off a little bit. Still not the greatest look for convergence, so it's kind of a choppy, sloppy day there. Do I think Rocket Lab is in distribution? Let me see. Rocket Lab. I mean, this was a pretty big, this would be considered a distribution day here. I would consider this more of a consolidation, at least right now, after a pretty big breakout. You see the breakout happened on some pretty good volume. And now, you'll know if it's for sure distribution later, but right now, it's more consolidating. The only real distribution day that I see here was this day. But I mean, that also came after a big run up. So that's going to happen. So you get this, big volume move up, and then all of a sudden, bam, you get a reversal day on bigger volume. It's kind of like pumping the brakes. People are taking profits and so forth. And then it has to die down, consolidate, and so forth. These averages have to catch up. So right now, I would put this just in the bucket of a consolidation. And then just watch volume. You can, if distribution days start stacking on each other, you'll know, because it means that it was a down day. So you have to have a down day, right? A down day. And with volume greater than the prior trading session, right? That would be considered more of a distribution day. If you start stacking 7 to 10 of these things, yeah, just be aware that you could be seeing some distribution take place. Snapchat. I haven't heard of Snapchat for a minute. Consolidating in bearish context. Did see it. That was a pretty big volume kind of squeeze up there. I don't know. It just, yeah, these setups, like I'm not a fan of the trend. So if anything, it would just have to be, once again, smaller positions. SMCI. SMCI looked pretty good over here, right? I think I was paying attention to this channel that it was in, and then now it's consolidating again. It doesn't, once again, this doesn't look horrible. It's just consolidating. And we're above a rising 20. The 50 days starting to turn up year to date, and the 200. So yeah, it doesn't look bad there. You're heavy and grab. Baba's consolidating. Baba's taking a little break. I mean, that was crazy. That was such a big move. I have positions in EDU. Oh, yeah, baby. Look at that thing go. Should probably pay attention to my portfolio a little bit, huh? New all-time highs. Give me a second. Gotta log in here, too. So this is Chinese, like China education. These names have been just smothered and smashed. And I put this one out as a trade idea over here on this day, and I took a position myself.
Excessive or unbalanced.
And I still have it. I took some off on this day, and then I added some on the next red day. And then today I did trim a little bit today. Before it was up this much. Darn it. But yeah, this looks pretty good. I also have a position in TAL. Dude, these things are moving today.
Just a bit further on this, it does note that 19 EU leaders call for modernisation of EU competition law and acceleration of merger control and state aid procedures at the EU level.
Hell yeah. I think I posted these on Twitter too. But I did talk about these in a brief. And I think on X... or I definitely posted them in the Patreon in the trade ideas, but I believe let me think here. I'm gonna repost it. Where are you at? Maybe it was in my dreams. Oh no, there it is. Chinese education equities moving and grooving today. That was October 15th. How's this day? It's up 14% since then. Smiley face. Retweet with a smiley face. No, I'll just do eyeballs. I did post on Patreon. Which one did I post on Patreon? I think I did EDU on Patreon. I didn't use TAL because it didn't look as good as EDU as far as the setup, but I think TAL is actually like a better play. If I remember correctly, TAL is actually the one that's in KWeb. I could be wrong there. I could be getting them confused. Let me actually look now. KWeb Holdings. Maybe EDU is the one that's in there. I remember looking this up like a long time ago, and these things change. So maybe for all I know is they're both not even in there. I think I'm wrong. No, I swear I don't know how to look at that. Whatever. Whatever. I'll have to look it up later. I don't feel like digging through this right now. Unless if it's here on my platform, I can do that. No, it's not giving me the, it's not giving it to me right there. I'd have to go to the website and look at it. Whatever. Well, one of them I thought was in there. China Internet ETF. I feel like it would be in here. Whatever. Yeah, so I used EDU, which TAL might be the better play, but this was the better setup at the time, and it's doing fine. They're both doing fine. Go figure. They moved together. Okay. DAL is starting to break. Does look nice. I kind of am like anxious. I'm looking at this. I'm like, I kind of want a position in this. I don't have any airlines on me right now. I think I have still ALK, but it hasn't gone anywhere. And earnings is around the corner. Like, I think this was my main entry, and this was or this is my average price, and it was like scaled through here. So it has literally legitimately gone nowhere for me. But I did I put on a small position because I was watching the interesting order come in that was up here at 57.50, and it expired in November. So I don't know. I found that one to be pretty interesting, the size of it. And I was like, I'm just gonna take a small position, equity position, and see and watch it and see what happens. And so far, nothing. So maybe it's something to do with earnings. Maybe somebody was getting positioned ahead of earnings. That was the catalyst. Maybe. Nolan. Oh, okay. Nolan says it is in KWeb. Thanks. Market net flow update. Market net flow is, the two lines are flat. You have negative convergence or red convergence. Let me see if I can update this. I don't know. It just seems off. It's not. It's right. It's not the greatest look, but it's flat. No edge really right now. It's, if anything, it's leaning more bearish, but if I look at price action, it's doing nothing. It's doing nothing right now. I wouldn't want to do anything really here. You're in ALK too? Nice. DAL is a better looking chart. I'll give you that. DAL looks like a lot better of a chart than ALK. That's for sure. It's pretty clean. Yeah. I think the last live trade that I took was CNP. Hasn't gone anywhere. I took the bulk of the profits actually today, and it was only up like 1% or 2%. It just started to kind of flop around. I'm like, it's just not, it just wasn't for me. I just, pretty much cut it. Actually, maybe it may have cut the entire thing. Let me see here. No, I didn't, but it's basically nothing now, which means it's not going to turn into anything for me because these are pretty lower beta. And then the one prior to that, what did I take? I took Halliburton over here, and then I got basically out the bulk of it there, and then it started breaking down over here, and I think I was out fully, and I don't have a position anymore. Today, earnings, bam, right back up to those levels. So if you're still holding Halliburton, still looking pretty darn good. Dow, I might just take a position just to have a position in airlines. Let me look at Jets. What's Jets doing? I mean, that don't look too bad. Look at Jets. It looks like it's trying to break out just like Dow. Now, if you want less like one-sided equity exposure, you know, this could be it. This could be setting it up. So let's look at some other ones. What about Love? Oh, this one's already starting to move out of this little breakout area. That one has earnings around the corner. What about Boeing? What else? We got UAL, is it? United Airlines? Earnings came out. That's kind of a little bit sloppy, a little bit choppy. I don't know. Something seems like it's building in airlines, actually. Here, I'll tell you what. I'm going to go ahead and take a 2% position, which is a small position, small size. Actually, that's more of a pilot. 3% would be more considered small. Let me see here before I do that. I'm going to be willing to risk minus 10%. Or just right down there, about minus 8. That's fine. Minus $5 a share. That's totally fine. All right. We'll put this on. Get a little airline exposure. So my position is going to be 3%. I'm going to break it up a little bit here. I'm going to start off actually a little smaller, and then I might just do a little add in it. Okay. Alrighty. There we go. So I'm going to start a little bit smaller, and then if it pulls in a little bit, I'll just add into it. And if it doesn't, then I'm just going to keep on pilot position. But I'm trying to build it to a small size. There you go. Let's see what else we got. There's so many names that I didn't even cover because I've been kind of just doing the names that are in chat. Tilray I talked about the other day. This one is still coiling up. You know, these are very high beta, so I'm always kind of hesitant on these, but like MOSOS, this one I have still a little position in MOSOS, and I give it like room to breathe because these things could be, I mean, this little tiny move right here is minus 2% almost. So a day like this, where it goes from high to low of minus 13%, it doesn't look like much on the screen because that's a high beta name. So if you go too big of a size and you get a minus 13% down day from entry, you're going to be feeling it. That's for sure. So my position in MOSOS is great if this thing just rips to the upside, it'd be great. But you know, if it breaks down, I'm not going to lose sleep over it. GDX has a 3 sigma move today. I believe it. Yep, big move. Minus smoked. Smoked. All right. How's everyone doing here in chat? Everyone doing good? Let's hear it. Let's hear it. Let's hear it. Let's hear it. A chicka 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 boom. A chicka chicka boom. Chicka boom boom boom. All I traded for a few years was PM sector. PM sector. What's the PM sector? Portfolio manager sector? The miners, platinum miners. Doom 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 doom. If you can, take a second to smash the thumbs up. Precious metals. Oh, okay, gotcha. That's a tough sector to trade. A lot of like catalyst kind of driven, you know. We've got ourselves, how many little thumbs up do we got? We got 88.9 likes. So somebody just hit it right then and there. We got 89 likes with it says 1,400 viewers in here. Dang, that's a lot of viewers. If you can, smash thumbs up. We're gonna go over some more names and plus some setups that are on my radar. Okay. All right, I'm going to open in a consolidation phase. Yeah, so a lot of these names, like the Open, the Reddits, you know, these are hype names that drove them super high. So yeah, they can create, you know, they're definitely consolidating. You can see that just by the range of these candles coming in, right? So they are creating better risk to reward opportunities. But you gotta just keep in mind that sometimes these names are just like they're kind of in their little hype cycle, right? So if you're like holding this, you're like, and you think like it's gonna go to $500 a share, it's like, okay, are you gonna hold it to $500? Are you gonna do that? That's what's gonna happen. And then how much are you gonna let it go against you if it starts moving up, right? So set up the trade like you always set up a trade, right? As a trade, or if you're trying to invest in it, you just buy it and just hold it, right? Because ain't gonna if I've heard somebody say that it's going to $500. That's crazy. But if it were to, right? If it were to, you got to size appropriately, right? Because you're going to go through 75% drawdowns on the way to $500. And I know this because look at Tesla. Tesla went to there, right? Open Door Technologies, though, is like, I mean, it's not Tesla. But Tesla went through 50, 60% drawdowns. Right? So the strategy becomes a lot different. And then, you know, the entry becomes different too on a name, on something like that. I don't know why I'm talking about this with Open here, but like think about Palantir, right? Palantir, right? This is actually setting up pretty nicely, by the way. It's getting tight right here and it's coming into earnings. But Palantir, right? Way back over here, right? Early stages of these bases over here, you know, you go through big shakeouts. Like this one over here is just clear as day. This one went 47%. There's probably multiple within these little areas, right? Even right over here, right? From this high down to this low, 80% drawdown, right? So for people that are investing, it's like, you don't just make your investment and then you're done with it. For the most part, you're like, I think that this company has value or something. And you would just say, I'm going to buy a little bit here, buy a little bit again, and buy a little bit again, and buy a little bit again. And I'm going to accumulate shares over the course of time. And the reason why that's a little bit better of an approach is because if you're not an institution, right, or you're just a retail trader, you got to take into consideration the emotional drive of going all in at like, this is my investment, boom, one and done. You're probably going to be more attached to it, watching it more carefully, be shaken out faster. But if it's like, if you just start small and you're like, it's down a little bit, I'm going to enter a little bit more. If it's down more, I'm going to enter a little bit more. I'm planning on holding this for 10 years. I ain't worried about it, right? Then your approach and your mentality around down days changes dramatically, right? Imagine buying up here and then it goes down against you, right? That much. Like, you're going to get out of the position. It was a horrible entry. But now if you look at it in hindsight, you're like, I was right, right? So say if the person bought it here and was like celebrating that they were right because it's up here, like, they're going to enter in another trade like this and they're going to not come back from it. And they're going to think that this is going to happen all the time. Just our human brain. BBAI. Big Bear Holdings. This is like one of the strongest. No. It wasn't Big Bear Holdings. It was Build-A-Bear Workshop. Build-A-Bear Workshop was like one of the strongest performers. What was that? Build-A-Bear? Yeah, look, it was flagging over here. I didn't like it over here, but it was still flagging and bullish, so it was worth posting. But this is why risk. Okay, actually, that's a good example of a breakdown. This is why risk matters, because if you didn't get out, look at what it did. So you have these consolidations. It's already a frothy run, but if it breaks out, you enter it in. And if you're holding down here when you could have got out over here, see, in hindsight here, it plays out. Look at this thing. I wonder if this is setting up here. Look at Build-A-Bear Workshop. This thing is this is crazy. We're talking from a dollar, a minus $1, it went negative. I don't know what's going on there. Probably something to do with this. Look at 3,500%. Hello. So yeah, BBAI, what is this one? Big Bear Holdings. I don't know. Is this some sort of AI play? Yeah, it's setting up kind of on the daily, but again, it feels like one of those story names. It's a little choppy. The weekly candles over here, not the greatest look. Big tails. So yeah, if it tightens back up, it sets back up. Cool. Yeah, it creates opportunities. Right now, it's where's my stop going to go on a move down? I'm trying to chase it down. Where down to here? If it comes down to here, it's probably going to go to year-to-day VWAP. So would my stop be down here or would it be down here? And if it comes down here, that's kind of by the 200-day, and it's a pretty big drop from there. So either one, it has to set back up and turn back up, and then I feel more confident knowing where I can have a stop. Or two, right, it comes back in and sets up lower, and then maybe play it back up. VST. It's consolidating. I just keep an eye kind of on this channel. Getting a little choppy and sloppy, a little bit distributionary. Like, it looks like distribution here. Right, so it's getting back below 20, 50, but it's still in an overall bullish trend on a larger time frame. So if it comes in, sets back up, maybe sets back up. You got to get these averages to start flattening back in, turning back up again. So it's going to take some time. Go to the weekly chart on this one. Take a look at the last weekly candle, right? Pretty big tail. It was very bullish, reversed, and getting some follow through to the downside. All right, so it looks like they step in kind of at around 180. So it's in that expansionary phase. So when you expand, you can either do quick fades or just wait for the consolidation. See if it makes a little bit more sense. Cores, CORZ. This one's looking pretty good. There was a nice consolidation over here. Nice breakout. And now we're kind of retesting this prior area and a new high. It's a new all-time high not too long ago. We've had now multiple weeks to the upside like this. If you're looking at this from a weekly perspective, I kind of want to see consolidation. So it would be nicer to see this kind of go sideways for 3-4 weeks. I don't know if that's going to be the case, but after a strong move like this, you know, it still looks like it has more upside to it. But I just would like to see some consolidation. Looks good. Some people have mentioned biotech. Yeah, biotech's been killer. Like, look at this. Look at this consolidation down here, right? Nice consolidation. Low risk. Boom, broke out again. Consolidated again. Bam, follow through to the upside. Now, would it be smart to enter right here? Or would it be smarter to enter, you know, and look like something that looks like this, where it goes and these catch up, right? It still might break down, but it makes more sense to consolidate. As you can see, it offers up better risk to reward. Hey, Red 5. I did just talk about hymns. Can I look at Oscar? Yeah, I do have a position in Oscar. Let's go, baby. It's up 7% today. Woohoo. So smart. Oscar looks good. Oscar from The Office. So Oscar, I looked at this as an early entry. So it's once again a smaller position because these things move like crazy, right? 7% up today, right? So hey, this can be 7% down tomorrow. And it would be where? Basically right here. You know, on the chart, it doesn't look like anything, but the number itself looks dramatic. So you got to just remember that, right? If you go too big on a name like this, these higher volatilities, higher betas, you can get thrashed not understanding this. I set it up to look at the weekly time frame because this looks pretty darn good, right? So I looked at, say, hey, early entry here, and if it breaks down, whatever, I'll get out and I'll see if it resets back up. But the early entry was come up back up to these prior highs, which you can see it's running into supply. So I would like to see it do some more sideways action and these to catch up. And it would just look this, like that chart right there would look so good. And if it were to just like play this rounding kind of cupping pattern for a full measured move of this, you know, bottom of this neckline up here, I mean, that's a huge, huge move. Up to 35 bucks from 21. I love it. I love it. It looks good. It looks really good. And guess what? Next week, it can look really bad by breaking down through this. It is what it is. So I took a position based off of just the chart, the setup, looking for an early entry. Because it's early entry, I take that into a factor. My position size changes. My stops go up. If it plays out, awesome. If it doesn't, whatever. And if it sets back up again and I'm still in the position, I can add more if I would like to. Point is not to make money super, super, super fast, because chances are if you make it super fast, you'll want to do it again and you'll probably end up giving the money back. The goal is to do this, to build wealth, to build an income over the course of time, right? Because you don't want to just be out of the game. You want to play this game for a long time. So there's really no rush, right? Remember, once again, I'll reiterate this for anybody that's new in here. The best traders, right, in the world, right, have historic track records of like 20% per year. And people like laugh at that, right, for whatever reason. But think through that. If you do 20 years at 20% every year, that's ridiculous. That's crazy. And then if you break it down even smaller, like you're looking to try to get 1% a month to 2% a month. And you can do that. So why the hell would you do 25% of your portfolio in a single stock? I mean, I get you got to size bigger when the opportunities come and maybe you're trying to in the early stages of growing, but just know you take more risk, you go through bigger swings and you put yourself into a position like that. So I get it because small portfolios want to build fast, but also, I mean, you can always add money to the portfolio. You build the right habits, and once you make more money or have more money, you can put more in. Once you get better, you add more money and so forth, and you can start growing larger accounts, right? All right. Might you sell when you reach the targets, or do you just use percent gained? Yeah, trader. Trader Gents. It just depends on the day and the move. Like, if it's like a dramatic day to the upside, I'll probably just trim some profits. right? I don't really pay too much attention to targets. I will set up like a potential like setting, like a setup, right? Like, so for example, for this one, I'm like just doing a projected move, but I'm not going to hold the entire position up to $35 because I don't want the risk of it coming all the way up here and then back down like that. So my stop is going to be adjusted and the risk to reward changes dramatically. Like for example, LEU, right? So I'll go back to this one. I'm trying, like my idea, you know, in my favor is I want to make the most amount of money in the shortest amount of time with the least amount of risk. And in order to do that, I have to find very tight setups. And when it breaks out in my favor, right? That was a very short period of time for this to go. It doesn't look like much, but that was 20%. That was 20% in like 3 days. I'm going to take some profits. And then in hindsight, it looks stupid, right? But look at it consolidated again. And then I missed the addition here, which I was ready for it, and I still missed it, to re-add the position after that. So I could have pyramided back. I didn't, and then through here, I took a little bit more off, and then my last exit was like when the position's basically a pilot position, I just exited out over here. And I said, if it sets back up again, I'll relook, but we're talking over 100% gain on my last part. But then the bigger size of it was down here, right, to get in, and then I scaled some out right away, and then I could just leave those runners to go, and it benefits the portfolio over time. So, you know, if I were to project a move like this, you know, I probably could have, you know, said, hey, my target's going to be up here, and I would have been right, and this was the risk, right? Okay, boom, you know, you would have got it. But the thing is, when it moves that fast, like say if I was in a full position, like that'd be a big move, right? In a very fast period of time, you know, 54%. And then the risk of it turning back around can be quite dramatic. So at minimum, you got to adjust your risk. So stop loss being updated, right, would be the minimum. Partial profit, right, could be another portion of it. And then on top of that, then you look for the consolidations to add back. Because if you take profits, the idea is that you want to keep trading into it and keep cashing it. So for Oscar, AOSCR, like, yeah, it's not a crazy position right now. You know, it's an entry position. If it comes back up here and then sets back up, I'm probably re-enter more into it. But if it comes up here, like in a dramatic move, right, from where I bought it, basically, you know, to 23, that's 10% or something. I might exit some right here. And then if it goes up further, cool, I'm in it. But if it sets back up, I'm like, okay, I'm gonna re-enter some of those profits in. And now I'm gonna update my risk. And now I'm just gonna trade into it and see what happens from that point. So yeah, I'm just not a huge target fan because, you know, like targets, price goes past targets. Price doesn't reach targets. So I got to just adjust when, you know, and every day brings on new data and you need to adjust. All right. Dude, we went from 88 likes to 122. Thank you all. Thank you, people. But we got 1,500 people in here, apparently, unless if I'm looking at this. I'm sorry, no, we've had a total of 1,500 people in here. Concurrent viewers is not that much, but we can hit that thumbs up.
Visas, according to Bloomberg.
All right. Let's see here. ZTS, let's see here. ZTS. A downtrend, lower highs. You know, lower lows. So you're fighting trend. Earnings around the corner. So if you're entering, you know, your stop would probably be the lows, and you just don't want to take those lows out. Kind of looks like Clorox. Clorox, right? Lower highs, and it's kind of fighting this trend. So Clorox, kind of interesting. You know, you're coming into earnings, but Clorox is also fighting. Let me remove this one. You know, you're getting lower highs, and it looks like it's on the verge of snapping down here, like breaking down and heading lower. But you also have this tight trend line, so price action's coiling up to the apex. So it's like gearing up to break out and just like, all right, we're gonna go test this year-to-date VWAP again, and then reset and probably head lower, or try to build the base out, or it's gonna crack lower, shake people out, and maybe turn back up. All right, so you look back to the left of this chart. I mean, you've had shakeouts lower over here. Horrible looking weekly chart, but that's my point. It's in a bad trend, but yet there's still opportunities. Like say if you play it, ignore earnings if earnings wasn't here, right? Earnings is there, but you know, If you play to the upside, right, your stop would be down here. Right? You don't want to hold it to new lows and then see it break down further. You would just rather have it turn, like say if it goes down like this, but then turns back around and goes way up. Well, you can just re-enter over here if there was that big of a deal, and then you don't need to deal with this.
Trade measures at the EU Leaders Summit in Brussels on
So yeah,
Thursday,
just pay
according to
attention to these
sources via
trends and take
Bloomberg.
that into consideration. Do perform views on a certain platform, LAMX. It don't matter. Either's fine. I'm watching YouTube chat, but Twitch is fine too. Twitch is where I started streaming. The Twitch community, Twitch company itself reached out to me, and they are the ones that convinced me to do live streaming. So they put me through their live streaming program, and they worked with me every day to set all this stuff up because it was actually it was pretty difficult. I'm not setting all this stuff up, all the software and the streams and all that stuff, and the screens and everything. I had my hand held by the actual Twitch employees. I didn't need to just figure it out for myself. Most people do, but I was like, Twitch reached out to me. I was like, yeah, sure, let's give it a shot. So my bigger platform is obviously YouTube, and Twitch was bigger, but that was also because I was just streaming on Twitch at the time. Nice, Colby. That's a big move, man. Netflix earnings play. Let's look at Netflix. When's earnings? After the bell? Yep. After the bell, we got Netflix. Shoot, this chart looks bullish. That love is blind, man. Just sucks people in. Love is blind. $88 of expectations. So, I mean, this could be at new highs, new all-time highs by tonight. Or right back to the inclining 200-day. So, I don't know. I mean, it's a bullish chart. You would think more bullish price action, but earnings are like a coin toss. So I just look at the expected move. So I don't know. You could do earnings butterflies if it makes sense. I haven't looked in the option chains. I don't really do much options trading. So there's probably opportunities within there. For me, I'm not doing anything. Deck? Yeah, we'll look at deck. Dick. Looks like I have been looking here. You're just matching lows. So I would say, once again, bearish trend. If it breaks these lows, be careful. You have earnings around the corner. Once again here. Wait, is that tomorrow or something like that? So another coin toss. Go into the trade tab. Looking at $12.50 expectations. Right, so that could be right back up here, which would probably shoot us right to the VWAP, which we've had problems before. So if it comes up here, you can always look for consolidations and breakouts from this area and play it like that. But if you enter now, right, you're exposed to $12, or wait, what did I say? Yeah, about $12.50 expected move of risk. That's one standard deviation. You can always do more of risk. So you got to be willing to lose that in the matter of 2 seconds. But yeah, bearish trend. It's a bearish trend, but it's holding on to these, just like the Clorox one that I showed you. It's kind of just boink, 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 and maybe it's building a base, getting ready to go. Sometimes these accumulation areas look like this, and sometimes you get moves dramatically down, out of nowhere, boom, and it freaks people out, and then comes back up, and then that's kind of the last hurrah of the accumulation phase, and it starts building its base back up. I don't know how that's going to look like that, but let's take a look at SPY. SPY's still not going anywhere. Market net flow 672. Looks like it's kind of like a pin there, so not doing much. Did I review the VTRS idea? I did. Yeah, I have a position in it. It hasn't done anything. It's kind of retesting this. It's already kind of ran a little bit, so I would think that we're going to get a pullback and some sort of consolidation. My thought is hopefully it holds the 20-day, 50-day. And then the 200 is still declining, which I don't like about it. So I had to adjust position sizing to be smaller because of that. So it could take some more time, but right now, you know, the healthcare sector and this space has been showing up. So I got a couple different healthcare positions on right now. XYZ. Yeah, XYZ, I think, was on the tight list. Let's go to the weekly. Yeah, this looks pretty nice. You're not lying. That's a pretty big base. What is this, square? Or no, okay, they call it block, right? Yeah, so through this kind of 80 area. The 40 week is still declining too, so this, you know, it still might take some time, but by 40 week, that's the 200 day. It's above year-to-date VWAP. A little choppy and sloppy, but could be a nice little setup. So if I'm looking at this, I'm looking at this kind of like range now. Here you go. So if you enter now, you're speculating that it's going to break out. But, you know, if it doesn't, if it starts breaking down here, maybe your stop is underneath this range or maybe underneath the year-to-date VWAP. So you got to just adjust like, okay, I'm willing to take a 13% loss on this name, $10 per share. So for example, if you wanted to risk 1% of your portfolio, right? 1% of your portfolio on a name like this, which is still quite a bit, and you have a $100,000 account, right? So you'd be willing to risk a total of $1,000, right? So you would set that up based off of there. And then if price keeps moving up in your favor, cool. And then you can always adjust your stop. So then, okay, now you're not risking 1,000. Now you're risking a little bit less. You always have gap risk, but you'd be risking a little less. And if it starts breaking out, maybe you take a little bit off and then, or move your stop up. And then now you're risking a little bit less than that and so forth. I'm gonna take a quick break. I need some water. Some more water. PCT, I did already mention earlier today. Looks like it's breaking down today. It was good tomorrow, good yesterday, coming back down today. The weekly chart still consolidating, and then these upper tails and how it's kind of closing off is not the greatest look over here. So if it starts breaking down, I get out, and then if it turns back around, I get back in, and overall trying to play a larger early stage of a markup phase. So it's just kind of dealing with the consolidation. This thing, right, so it says down 7% today. What was it yesterday? It was up 7.5% yesterday. This day it was up, right, like a lot more. But overall, it's still within this kind of overall thing. We're just dealing with a lot of chop and slop all throughout here. It's shaking out for a move here. So if you go too big in size, these days are gonna like rattle you, or you know, an up day is gonna like get you super excited like yesterday. But you know, when you're sized appropriately, that doesn't really matter, and it shouldn't matter because if you look at the chart here, like what has it done? It hasn't done anything. So your emotions should be nothing. And if it is, then it's too big of a position.
Something for Baker Hughes, BKR. Do note Aninum reportedly builds a stake in Baker Hughes and is pushing for a breakup. So that's Aninum there, building a stake in Baker Hughes, ticker BKR, and pushing for a breakup. It's according to reports in Bloomberg.
Oh, according to reports in Bloomberg. Going to them reports in Bloomberg. Got a little bit of this, I got a little bit of that. Going to Bloomberg. Bloomberg, Bloomy. All right, I'm gonna go ahead and I'll put this up on the chart for now, and then this page. And I'm gonna take just a quick little breaky.
Just a bit further from that Bloomberg report, do note Aninum does see substantial share price upside of 51% from separation of the OFSE units. That's the oilfield services equipment. According to presentation from the firm's head of engagement, I'm not there for Baker Hughes, BKR.
Baker Hughes. Yeah, I can look at Crocs. I'll do that in a second. I just gotta go grab some water and stuff. Be right back.
And do note for Apple, AAPL, report suggesting Apple is working with Samsung, SS, NLF, the ADRs on display for the 18-inch panels for iPads. Apple possibly working with Samsung display on 18-inch panels for the iPads. Does note that Apple's foldable iPad expected in 2028 is now expected for 2029 or later. So commentary here from the Senate Majority Leader Thune says they are planning another vote on the stopgap Republican bill tomorrow. And do note, Senate Majority Leader Thune is hopeful that this will be the week the shutdown ends.
kid's hilarious. So funny. All right, let's take it here. Let me see. Beep, 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 beep. Right back is over. Okay. The most accurate chart to look for entry. I mean, whatever one. I mean, they're all the same. I wouldn't look for accuracy on. You're going to have accurate daily, accurate 15-inch price, right? Price doesn't lie. You get buyers and sellers, so you have to find a time frame that works for you. And it's going to be accurate. That's what it comes down to. Don't try to seek out perfection. You're not going to have perfection in any chart for time frame. You're going to have fake outs and so forth, but you got to
$57.82 per barrel.
Find consistency. Like, yeah, I can look at plug. Plug. Yeah, it's pulling in. Could be kind of more in a consolidation phase, but it's still, hasn't proven itself yet. So just pulling through here. Maybe look for the lower. If it can hold the 20-day, cool. But you'd also want to see some strength and then have an idea of where your stop would go. Because if I enter now, it's like, where's my stop go? At the low of the day, probably going to get stopped out. That would be more increased possibility of getting stopped out down here. SoFi earnings coming up. Yeah, I think I still have a UNH position. I believe I do. Traded this multiple times. SoFi earnings. That thing's been on quite the tear. That thing's not looking too bad. This one's holding up quite well. So we'll see what earnings brings. BMNR. I mean, it's getting tight, but these are like sometimes those story names that they just like fire off because of a short squeeze or something. I don't really trade these type of names. I just don't, I don't feel comfortable holding something like this for a long period, unless if it's more widely known. But overall, I mean, you're getting these higher lows built in. So if it starts breaking through the day's high, yeah, maybe it sets back up to come up to these areas again. You have an idea for a stop. If it squeezes, awesome, but I don't really know too much about this. Bitmine immersion. Crocs, yeah, you had mentioned Crocs. Crocs looks like it's trying to make a little bit of a comeback. Yeah, the higher lows building, and then it got really tight here. So I can see the case for a pop through here and then come back up to that year-to-date VWAP. But you are still fighting year-to-date VWAP and then a declining 200-day moving average and these prior areas. So big earnings to the downside, and now it's getting pretty tight here. So this wants to pop a little bit higher. You got to be a little bit, aggressive and move your stops up and so forth, and you'll probably get stopped out at some point. But you go to the 15-minute time frame, it's actually starting to turn around here, and look at how it's building up into, rising 5-day moving average. So it looks like it's setting up for, this could break through here and, move up, a few bucks per share. Looks good. Looks good, but it's also not the greatest as far as full context. So once again, you got to take that into consideration when setting up a trade. iNod. Big run, big volume on that run, looking for the consolidations. It's kind of coming into this prior area over here too, which is looks pretty nice. So through here, set back up. That'd be nice, and then you have an idea for a stop entry. But if you enter now, you probably have to deal with something, some more time. It's only been a few days of consolidating and pulling back, so Were you still in Burke? I don't. No, man. I've been out of that thing for a long time. I think I maybe traded it over here, and then I'd been out over here. I can't even remember, but I probably took profits on this day. And then, yeah, no, I've been out of this. This hasn't even been on the radar for a minute. I think I was looking at it over here, and then, yeah, if this turn around, I'd be out.
Just want to bear in mind that's the UK.
And that goes to just risk to reward, right? So he breaks out above all these things, looks great, completely reversed. Like, definitely don't bother holding in,
the cost of living.
because then you're holding in.
DFT, she was determined to get a grip on borrowing.
You know, it's 22% down.
To cut household bills, creating
Not
space
looking for that.
further rate cuts in the coming months.
How did I know to short gold? Are you talking about the trade that I did yesterday, or the the gold miners?
The Chancellor's view is that tackling the cost of living is urgent, and everything is on the table, including measures to bring down energy bills.
Probably mean the miners. Hood. Yeah, Hood looks good. It's just going to consolidate in its crazy move. This thing is a monster, right? Ran up to 140. You're going to go through periods where you go through like 6-month consolidations. All right, look at this consolidation over here. 1, 2, 3. And then into its 4th month, it started breaking out. So this is a big run up. So yeah, this is the first kind of pullback here into a rising 50, right? 200. So I would like to see kind of come in, shake some people out, come back up, maybe early entries around here, and then even, you know, take some more time to build out a larger cup. I don't know if that's going to be the case or it's going to parabolically move up. And if that's the case, I'd probably see it coming right back into this area regardless. So mRNA. Let me see here. Moderna. I don't know why, but Moderna sketches me out a bit. But it did the chart, like, so it is consolidating. It is setting up. So that's nice. And the healthcare sector is doing good. It is below declining 200-day, below the year-to-date. I think there was a lot more other healthcare names that I felt more comfortable doing. But yeah, I mean, you probably see bounces in here. Something about Moderna. I can't remember what I read about it. But it was just something for me is just not, like, I just kind of skipped out on that one, and I was looking at other healthcare names. Let's see what Jazz is doing. Jazz was on the list. Just nice consolidation back into here. Seeing some bullish move today on good volume. I mean, this thing looks like it wants to retest these highs and potentially go higher, maybe 150. Pretty clean. I can't really remember if it was Moderna that bugged me or for something else now. All right. So yeah, Jazz looks pretty good. Let's go back over to SPY to see what's doing. SPY hasn't even done anything today. Ish quiet. Too quiet. I'm going to go through my tight list. Dixie going up. So, yeah, and that'll happen. Dollar's breaking up to the upside. So somebody had mentioned gold. Like, why is it going down? Could be this. Let's take a look at yields. What is yields doing? That's a big factor too. I mean, there you go, right? So yields are getting broken lower, and they've been having a pretty strong negative correlation. So we'll see kind of, you have dollar up, yields down, kind of tug and pull over here. Sometimes when they both move hand in hand, we've seen stronger correlations to other assets. So let's take a look at oil. Not doing anything these last few trading sessions. Which actually to me is interesting, because if oil is giving us a signal here that it might bounce a little bit, this is an opportunity to actually exit some of your bond position and or fade the move in bonds. So for example, if I go to TLT, see how it popped up? We were talking kind of like this flag. Well, it broke out. Now if oil is actually given a signal, that means if oil rises from here, chances are 10-year yield is going to rise with it because you typically have a strong correlation there, and that could be bad for bonds. So you might actually, this might be the time to actually like see a pullback or consolidation in something like TLT, right? Or a different proxy. But so I don't know what is an inverse fund here. So TMF, no, not TMF. What's just TMZ? I can't remember. No, not TMZ. What's a bearish TLT or bearish TL? Why am I bearish? TMF? TMV? TMF? TMF? TMV? TMV? Yeah, so TMV, for example, like, so if we're right about that, maybe TMV bumps up a little bit, right? So, that could be, I'm just thinking very short term. So once again, like if bonds are starting to perform stronger, you don't want to necessarily, you don't want to chase them. You want to look for consolidations, but sometimes these divergences in the market, lead to short-term opportunities. So, I don't know. See a bounce back from TMV to here. It's 1%, 2%. Nothing crazy. Maybe more. Who knows?
And Brent
It would be much more
futures
beneficial if
high
oil
today,
bounced,
31
though.
cents to $61.32 per barrels.
And, these lower tails here move up higher. It's getting back above the 5-day moving average. I mean, if I were to guess, I feel like this is an area where oil can get a little bit of relief after this sell side. Still in a bearish trend. So once again, still bearish. So you're fighting that, but remember, 10-year yield. Right. Also, not the greatest look. It's pretty bearish, but it's been dramatic to the downside. So oil giving us insight that we might see this bounce. That's a good recipe right there. That's a good recipe. Chingur. Look at Merck and Docu. We can look at them. NBIS. Cheer.
Just want to be aware of. Do you know NATO?
Hey, Darren, thanks for that.
We'll be visiting Washington on Tuesday for talks.
Thanks for the super chat.
sources
$5
for
super chat. You
operators.
didn't need to do that. Do I think it's concerning the SPY can't get above 673? Where's 673? Boom, 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 boom. I don't find it concerning necessarily. I don't really find things like overly concerning. So yeah, 673. Well, let's take a look at. I mean, that's the magnet right now, 673. So I wouldn't be surprised to test that. Just if I'm looking at it, the reason why I'm not concerned really is because the red line's kind of been up, green line's been going down. So it hasn't been the greatest flow for just today's trading session. Now, if I go to SPY on the daily time frame,
Warner Brothers Discovery, latest sources notes Warner Brothers Discovery.
it did go
report
above it
projects
over
the
here.
current
So
balance of
I mean, you're
between
just talking
23
like
to $24 a share. Says the offer was mostly cash according to sources. Do believe there have been reports in recent weeks suggesting this was the case, and that Warner Brothers are actually pushing for something more towards 30. I believe that was reported by Gasparino. Again, latest Reuters sources here. WBD rejected Paramount's guidance offer of between $23 to $24 a share.
that area, 673 has been a pretty big area of supply. So, traders come in and then it gets rejected and so forth. So the more times that we fight for this, the chances are we'll break right through it. So I don't find it concerning yet, but you can see that when we come and fight these levels, so to see it take a little bit of a break and try to go back up,
updates we had today for Warner Brothers Discovery.
very possible. It would just be more beneficial if we had more positive flow, and we don't right now. It's not the greatest look. Actually, the green line's going down.
By CNBC earlier today.
Let's go to Merck. Yeah, so we did talk about Merck already a little bit. Yeah, Merck, I mean, we talked about this on the video, right? If you caught that, the video that I posted, it looks good, right? So the stop would be down here. That looks good. It's breaking out. So you can update stops, take partial profits, so forth. But that's exactly what I would expect to happen on a move like this. Strong move, comes in on lighter volume into key averages, bam. Looking good. DocU. This one's a lot more sloppy, choppy all over the place. I'm not really interested in setting new positions and things that look like this. I need cleaner looking charts, right? If I was looking at this, maybe that's tighter price action over here. So it breaks out, you have a, stop. But then even then, like the position would have to be smaller because of the context of this chart, right? It's just all over the place. It just doesn't make sense for me. So I'd have to go out further to like a weekly time frame and then maybe make the trade based off of this. And I look at it like this and say, okay, maybe if it comes back up into these areas and starts breaking out through here, that might be a lot better of a look. That would be a better look. If it starts breaking down from here, then I'm out, right? Apple. Bullish. Yeah, Apple's very bullish today. Hasn't done anything basically. It was a rip up the other trading session and we went sideways. It's the same thing. We ripped up and we're kind of going sideways here. But big day the other day. So consolidating. NBIS. Gotta look for consolidations. Things coming in. Right, so NBIS, we're looking at it here, looking at it here, looking at it over here, probably even looking over here, and even over here look good. These are the tighter consolidations. Now it's like, bam, like a few days, goes from 140 down to 102. That's a huge, huge drop off. Nothing yet, right? So you'd be entering into no man's land down here. You don't have where does your stop go? Where do you adjust? You can go into the smaller time frames and say, yeah, this is extended. You're probably going to get a bounce. So if you play a bounce trade, and you're fading it because it's an extended move, right? Things can still get extended. That's totally fine. But you got to take into consideration your position sizing dramatically here because if you're wrong and it keeps going against you, you're buying into a downtrend. Yes, it's extended. Yes, it can create little opportunities here and there. And if it bounces, you go from where we're at now up to maybe this node, up 3%, 2.62, 10% would be just right back up to this one. They'll set back up. They'll set back up and offer up better risk to reward because all markets do that. All assets do that. They move between expansion and contraction, and we're right now expanding. Lulu made sense for a shorter term long as it was breaking this channel. It's just still, once again, in bad context. So if you enter in, right, your stop would probably be down here or maybe under this breakout area. And then where are you going to play to? Maybe around the 220, right? Because you're still fighting trend, declining 200-day, declining year-to-date VWAP. Right? Weak stocks can get weaker, right? If you thought this was the bottom, incorrect, it came lower. If you thought this was the bottom, incorrect, it went lower. If you thought this was the bottom, incorrect, it went lower. If you thought this was the bottom, incorrect, it went lower. One of the basic principles, right? Strong stocks get stronger, weak stocks get weaker. You can still play weak stocks, but you got to adjust when it comes to positioning and how you take profits and so forth. I'm going to go through some of my charts here. Intel's still consolidating. Intel's trying to set itself back up. I don't think I have a position in Intel anymore. I caught it way down low. Did I cover Disney? No, I forgot about Disney. My bad. Disney. Bounced right from the year-to-date VWAP. So it's having its first initial reaction. So if you go along Disney, you can probably have a stop right underneath the year-to-date VWAP. And it's kind of pulling into its trend line. So if you can doodle around in here a little bit, that would be a great setup. Something like that. Right now, it's a little long in the tooth on the shorter time frames, but that doesn't mean it can't get more juice. Just look for consolidations. And it's at its daily volume weighted average, or daily IVOL range right now. So I'd like to see consolidations up further or consolidations here in the very near future. And then if you look at the daily chart,
Just going back to that earlier,
doesn't look
piece
horrible.
regarding Chancellor Rees does note within the article that some Labour officials believe the
GDX for a
Chancellor
bounce.
election manifesto commitments and increase income tax rates in the budget to close the fiscal gap. One senior Labour figure said that putting up income tax was increasingly likely because it was a straightforward, albeit politically painful, way to raise more revenue in a single policy.
Yeah, GDX probably will get a bounce. I'd be more cautious right now. I played an intraday bounce over here. But you know, if we close at the lows, you typically get sometimes follow through and or just an inside trading session. So is it worth pressing the button now? This is how I think. If you're going to play for a bounce and you're basing off a daily chart, you would try to build into a bounce, and because it's in a bullish trend and it could still potentially go lower. So I would be looking at the daily ranges. So today was like a 3 sigma day. So okay, boom. Maybe enter a little bit. And then tomorrow, right, it might come into its lower implied move, the lower daily range, kind of how it, went to the upper daily range here. So if it comes down tomorrow, I'd only enter more if it gets like more towards the bottom range of its eyeball range. And then I'd feel, I'd be buying into projected risk levels and wouldn't just buy like intraday randomly and then it just break through and go further. But I wouldn't go like a full position to buy a dip right now. It wouldn't make sense. So at minimum, it would be looking for like a scale and or I just put a little bit on, and if I'm wrong, I just get right out and I wouldn't even bother scaling. So you just have to kind of consider and think about that. Or you just say, hey, if it gets down to the 50-day, I'll do a little there, right? I'll try it there. And if it doesn't get there and it bounces like this, then you just don't even take it. It's fine. It's good to miss trades. Would let me take on BB, BlackBerry. I mean, this is kind of setting up. Yeah, I mean, it's kind of setting up right now, surprisingly. I think this is the best, I've seen of BlackBerry. I've seen it a few times in, lower levels, I guess, but it's funny. I'm not a huge fan of trading these type of things, but it is consolidating. It's flagging right here. So, and it's above the year-to-date VWAP. So if you were to enter in as a breakout, do you think it's going to pop up higher? You can just have a stop underneath this, this area over here, the year-to-date VWAP and or the 50-day, 200-day. But you are getting higher lows. Now you're getting a tighter consolidation. You're getting a little bit lower highs, right? So it's coiling. So if it's just break out from here, you potentially go test 5 again and maybe go higher, maybe not. Doesn't look horrible. I've seen worse charts. That's actually kind of funny. And I'm like, yeah, actually, it does look like it's prepping for something. But for what? What's it going to do? Just straight up order flow, like a squeeze of some sort? I don't even know what the short interest is on this. But you had earnings, and it was a bullish earnings move. So that's out of the way. I don't know if earnings were good or not, but regardless, the action to the upside was good, and now volume is drying up and it's consolidating its earnings move. So you take a stop, it's like minus 7% to this low, which can happen very quickly, or just this low over here. minus 10%. The risk to reward makes sense, and it's in a decent context, if that makes sense. Unfortunately, it's just BlackBerry. Like if this was like a bigger company, like BlackBerry's, I guess, it's big, but it's like if it was a more serious like market cap name, like and I saw this setup, I'd be like all over it. But when it's like, under a $5 name, and it's like, okay, still can see great returns. It's just not these aren't my type of setups. You still make great money on them, though. That's for sure. Great money. BB short float is like 4%. Yeah, so it doesn't. So nothing. Yeah, you'd want that like more like 10, 15, 20. But I mean, I don't know. Even regardless, like look at it's like this little cup with handle over here. Like what's BlackBerry setting up to do? Like what are they going to launch they're going to come back into the cell phone space, or is it like security software? Like I know that they probably have deals with like maybe more like maybe they make more like government security. I don't know. What do they do? What do they do now? Intelligent security software for governments around. That's exactly what I just said. That's hilarious. Okay, well, there you go. I mean, that's important. BlackBerry, dude. I like it. I almost want to. I almost just take a little position just to have it, just to kind of follow through on like, hey, see what it does, right? Order flow moves nicely to the upside. Now it's drying up. This makes sense. These charts, it looks good. So good. Yeah, good call out. Good. I mean, it looks good. And it makes sense from a risk to reward standpoint. Isn't like, so what's Snow? So Snow, is that cybersecurity too or no? Data, cloud-based data. I don't know if this is security, artificial intelligence. Okay, never mind. This one looked good. I mean, this is still like consolidating here. That one looked fine. Hey, thanks, Exo. I appreciate that. Thanks, Exo Trader. QNX division for BB is big in robotics and medical devices. See, yeah, that's interesting. Like, it's almost like a whole new approach. Like, BlackBerry was known for their cell phones, but, like, ain't nobody buying those. But now you're seeing, like, government security stuff and what you just mentioned in robotics and medical device. Like, hey, you never know. Like, they can pivot and they can just get these big contracts and all of a sudden be super valuable. And if the chart sets up, it even makes it better. And the chart looked good. It can take like, 1 week later, it can be not as good looking, but it looks fine. I mean, I like Gilead Sciences, right? And that looked like a good chart, right? It was coming in kind of just like that. You had those higher lows. Yeah, this is way more bullish context, bigger market cap name, bigger company, at least from my understanding. So you look at BlackBerry, but I mean, it kind of like has that, those higher lows. Just ignore the name of the company, ignore the price, everything. And you just look at price action, right? Price does this across the board on all types of equities. And when you could find these little tight contractions, offers up great risk reward. Because even if we were to just get like a measured move of this like little breakout, right? This is just a cheesy technical, trick of, you measure the flagpole. I don't know why my thinkorswim's not working, but basically this is the flagpole. And if you, break out, like, and you measure the move of the flagpole up to 550. So in theory, let's just say if you're thinking that was going to be the case, you risk 7% plus, right? And potentially, get 18%. So that's great risk to reward. That's just setting this trade in the stage for something like this. But you adjust as time moves forward, right? Like if you get a big move up, sometimes you might take them off or update your stop. Okay. Snow is pivoting to nose beer market. What does that mean? Nose beer? Oh, is that a joke? Here's another interesting name. Took me a while to get if that was a joke. Etsy. Another this is like an online retailer. This is just consolidating after a nice move up. This one has earnings around the corner, so we gotta be aware of that. You got a $9 expectation of a move, so we'll see what that looks like a little closer. But nice consolidation. We have what? 1, 2, 3, 4, 5, 6, 7, 8, 9. Easier way to do this. About 16 bars of consolidation. I love that. Like anything from 7 plus, 7 to 15, on flags. I like these kind of consolidations. You just have earnings right around the corner. That kind of throws a wrench into stuff. For me, some people know how to trade earnings, like do all the option stuff and all that good jazz. Well, look at pins. Yeah, I haven't seen pins for a minute. I wanted to really quickly look at TJX and Butterfly. TJX, this is TJ, like the clothing place. This one's looking, higher lows above these rising averages. Also, setting up. Feel like it wants that 150. It's not too far from there. Get that round number. Bullish context. Really quickly, ROST is kind of looking good. So these kind of like retailers, discount retailers maybe. But this is also coming into this prior high. If this shapes up a little bit, this doesn't look all too bad. What about 5 below? My son loves playing at that store. It's like, there's no toy stores around anymore. We need more toy stores. But when we're around a 5 below, he likes to go in and throw balls around. KC, CASY. These are just general stores. This one was setting up, but it doesn't look good today. So we got to see what that looks like with more time. Oh yeah. Okay. What was pins? Pins is floating around its year-to-date VWAP. 200 is inclining. So this one has a little bit of time, but this could be something setting up here. Sideways, basically all year. So build me out that base. Now I'm thinking about Roku. Roku doesn't even look bad. Look at Roku. Kind of bumped its head. Little squirt past the high. This shapes up. This one also, right? In bullish context, give me some more consolidation. This thing set up a move, Bank of America. Yeah, Bank of America has been looking fine too. These are just consolidating these highs. All good looking charts. There's so much good looking charts out there. It's insane. Oh yeah, Butterfly. This is like a more speculative play here too. But I did notice some nice consolidations over here and then flags. And then the reason why I came back on my radar is because it was starting to consolidate again here. But the only downside is it's below that VWAP. It's below a declining 200 day. So it's probably going to go through more chop and slop. But, big move up on volume breakout, good volume breakout over here, more consolidation. So if it does start maybe taking this out, say if it turns back up and goes sideways some more, that could be a really interesting look for this chart to kind of get through that year to date VWAP. The weekly is even back here, I think I was looking at it over here. Pretty clean consolidations from a weekly perspective, and that led to a nice markup phase, and then it all came crashing down this year. So it's trying to come back a little bit. Which you could say, if you look at this, like, well, all these other stocks did come back and this is not one of them, which could be a bearish sign in and of itself. But even so, you know, you could still get setups. Do I think GDX will hit low 60s? End phase, ENPH. End phase is a trippy looking chart. I'm not a fan of this gap down, move up higher, gap down, move up higher, come out lower. It's really choppy. You have earnings around the corner, so it's starting to flatten out. It's at least building some sort of a base. It's just underneath these larger averages. So you can probably create some trade ideas in here, you know, if you're looking for a move, but you got earnings kind of right on this corner. Not a great looking chart, right? So once again, weak stocks typically get weaker. Strong stocks typically get stronger. This is a weak chart. So if this was going to move into a markup phase, I would think that it would like go sideways for a while, like we've seen in other names, and then try to like break out further down the road. It's not always the case. If it goes like this, I would think it's going to come back in, and then hopefully it still would take some time to set something back up that's more realistic. But GDX down to 60s. I mean, sure. I mean, it went from the 60s up to 85 in a month, so can do the same thing to the downside. I don't know what that would look like or when that would look like, but yeah, that's obviously possible. It's not going to be an easy ride down to 60s. You'll probably get rips back up to the upside. Heck, maybe even break this high. Goes up to 90 to 100, and then it comes down to 60s. So, you know, I don't like starting a new short position like that. I took a short position in miners here. And then I got out. And then it went down further. So I'm not much of a fan of holding on to shorts for all too long. When it goes in my favor fast, I'm just like, all right, I'll take it. Or leave something on if I can, if I think about it. If it makes sense too. SNEX. This is kind of interesting, at least in the corner of my eye. I want to just see what this looks like here. It looks cooler on my other chart. But you are, you know, higher lows. Price is getting pretty tight. Could be, I guess, one to watch for a breakout, but see. Market is doing nothing, which I'm okay with. Jeez, Oscar took off. Holy moly. Good stuff. Probably reverse tomorrow on me. And then these China education names. Holy moly. I love it. Now I'm just going to have to hold on to it. I scaled out a little bit. Now if it sets back up, I'm going to try to add more. Okay, let's run a quick scan here. These are names that are coiling up. I'm just going highest market cap. Just going to go through a list of these, just see the charts really quick. I'll go through you guys really quick. HLIO, Helios Technologies. I mean, that looks good. It's quite the comeback there. I want to see it consolidate, but it is coming back into the prior area of consolidation. So that looks pretty good. WMB, Williams Cos Inc. This looks good. This is consolidating a recent breakout. It's a little bit more sloppier moves through here, so be aware of that. Could be just the type of company, right? That it's just more choppy and sloppy, but it is nice move higher, and now it's consolidating. MLM. Looks like it's due for some sort of a base over here as it kind of broke there. Still bullish context, bullish looking chart. Probably needs to do some consolidations after that, those couple of days there. WSM. Looks good. This one's kind of just doing its thing. Like, I would be even like fine with it, even buying higher up at like 200, trying to break through. This could be a potentially early entry to go try to 200 and then look for the consolidation. And the stop could be just down here. Williams Sonoma. Williams Sonoma. This thing went so far so fast. Crazy. Actually, now, like, what about RH now that you mentioned that? Williams Sonoma. It's at lows of the year. Some of those, like, mall retailers that I always see. Okay, let me see here. I want to go through some of these names that just had these contractions going on. No, I already know AVGO, JPM. JPM, I thought it's kind of going sideways. AZN. Okay, AstraZeneca, that was one that was kind of on the healthcare sector that's just consolidating, flagging out. Maybe look to see if it can come into the 220-day, see what it might do from there. Sets back up. That was on the video the other day. Disney, somebody already mentioned Disney. This one's kind of breaking out of its tighter consolidation today. This one doesn't look all too bad either, so that could be one setting up for a move. Intel we mentioned already. AMAT. Why is this one showing up? Let's see what that's doing. AMGN. Amgen. It's kind of breaking out of its little tight. That was on the thing. What's APH? ETN. Here we go. What is this? Industrial? So ETN. And these things ran. Looks like it's just kind of consolidating up here. Be one to maybe keep an eye on. BHP. Capital One Financial. No. Crowd, CRWD. Huh, interesting. CrowdStrike. This one's running into its high. And you have price consolidating. This was actually a trade idea right here. I'm out of it. I took it. And I think I actually even looked at it over here, but I didn't do anything with that. And now we're putting in some higher lows. Price is kind of consolidating. So are we getting ready to break this to continue higher? Maybe even try to go like, let's say 600. This thing has also been up. Look at this on the weekly time frame. This looks actually not bad on the weekly time frame. 10 weeks floating up, 30 week, 40 week. It's in a very bullish trend. You have some weeks that are tight here. I mean, that's a bullish chart. Remember, strong stocks typically get stronger. Obviously, you deal with some risk, but if it breaks down to this low, that's minus 7%. That's pretty normal. And if it breaks out to 550, that's 8%. If it goes to 600 or something like that, that's 20% gain. CrowdStrike looks pretty decent. Whatever this was, it must have been news. Big volume day, nice consolidation pullback, and it's been just kind of consolidating that big bullish move here, which had to have been something to do with news. That's a big day. Let me go into day was that? Oh, we're there. Okay, it's above there. A little frothy, so maybe if this starts to come in a bit and then build some strength, could be a potentially good early entry and have a stop while this kind of moves up higher. Or just give it some more space and you start small, and then if it does it, you can try to add. And if it starts breaking, then get out. But let me see the daily. Did do a move there. Not too shabby. CrowdStrike go on the list. You sold CrowdStrike, that's what happened. I mean, it doesn't look too bad. I gotta make a note of this. Let me, I'll just write it down here. There we go. Okay, keep continuing on. BN. GSK. This one I talked about, I think, in the other video. That's just flagging. And Mondelez, that's different. I'm just going through some of the names that popped up on a quick scan. ECL, Ecolab. This kind of looks, it's gearing up. Is this an industrial too? Material. See, materials, if you look at the bullish percent chart on materials, it actually is kind of setting itself up. So higher lows, positive, a little bit lower highs here, and it's kind of coming into trying to test this area. So I don't know if it comes in a little bit and tightens a little bit more there. Let me go to the 15-minute time frame. Not too bad. Weekly. Oh my gosh, man, these weekly, everything's at all-time highs. Which is fine, but just CRH. Another material name that's doing good. Just this one's consolidating, so another material name. HWM, that thing was a big runner. This thing looks like it's trying to go take out 200. This was a trade idea, I believe, over here. HWM, CM, GLW. I mean, geez, that's consolidating, but that thing went on a wild ride. Marriott. Ooh, I think I talked about this one actually. This thing is like coiled like a spring. I wonder how leisure is going to do, but this is trying to break back up. It tried to break down, now it's breaking back up. So if this is actually going to make a run, is it going to do it here? Activate this drawing. Let me see if it's kind of like butting its head up on this. That's if you go long now, you have a stop down here. It's minus 4%, maybe a little bit more. What's Hilton doing? I don't know, nothing. JCI, I think that was in the trade ideas. JCI, yeah, still hasn't done anything since the original post. But this one's coiling up too still as well. Like that, it doesn't look horrible there. JCI, CP, a little sloppier. FTNT? Is that trading? Why is it gray? This one's consolidating, but it had a big break, so I don't know. CL, that's Colgate. I think talked about, no, it was CLX. It doesn't look good. Not right now. Oh, there's Hilton. So it did pop up CNI. DLR. This is a REIT. Some REITs actually been, on the other video that we talked about, REITs were setting up pretty nicely. We need to see some strength in this to break out. It doesn't look horrible. Well, What did XLRE end up doing? Started breaking out. CPNG, we did talk about earlier in the show. This one is coiling up quite a bit. Looks good. Let's see it break out. Datadog, that popped up. That's just consolidating. MFC. What is this? What is MFC? Financials. Oh, financial above a rising 20, 50, 200, and it's consolidating right here. You do have earnings, but it doesn't look, you're building these higher lows also into this pivot area. It doesn't look all too bad. Dominion Energy. Consolidating highs. AME. Consolidating. CCL. Oh yeah, what's happening in the cruise lines? A little sloppy everywhere. Cardinal Health. Cardinal Health we talked about the other day. That looks fine. CUK, that's another cruise. FIS. ARES. DTE. FE. FT. FA. TE? Oh, this thing took off. Energy solutions for solar and batteries. What about ENVX? That's isn't that what they do? Kind of looks like that. Lithium battery cells in the United States and internationally served in IoT smartphones. Okay, no, different. TE. Consolidating. That's a big run up. So maybe see how this one consolidates, pulled down further, sits back up. Eek, gross. Chart looks crappy. Mobileye. Haven't seen that one for a minute. Let's see it. So Mobileye is kind of butting its head at that year-to-date VWAP. So if you go long Mobileye and you think that this is going to turn around, your stop would basically be under here. Earnings is around the corner. So yeah, earnings is like around the corner. So 1.4. Who knows what this is going to look like. But yeah, if it can get above this, I mean, that can open the door right up to around 17, 18, 19 and retest that trend. It's not the greatest context, but it is, you know, consolidating. You're getting these lower highs, so that's not positive, but you are getting higher lows, and it's holding here. So if it breaks here, you know, you don't want to be part of that. And if it turns back up, awesome, you can maybe reset back up. But if it can start creeping through here, that could be nice. Oklo, DOD contract, DOD ENS is profitable company that makes batteries in ENS. Did I pull that one up already? Holy moly. Yeah, this thing is crazy ripping. So they did a DOD contract. Military, aircraft, submarines, tactical vehicle. Okay. There you go. Things are ripping. Look at this. This is great. I mean, definitely should keep this stuff on the radar. Look for these consolidations. I don't feel comfortable entering, you know, after a run like this, but you know, if you can get a few more days of this, you know, 5, 6, 7 more days, and it pulls back into these rising averages, or even goes up higher and then just builds out a base, I mean, that could be great. I don't like chasing the high. I just need more consolidations. As far as Oklo goes, I mean, this thing went crazy. I'm not, like, for a shorter term trade, yeah, you can probably find those scalps. I had a short on Oklo. I used OKLL, I believe it was. Or no, I shorted OKLL. Yes, I shorted OKLL. Because I thought that, you know, prices don't really go anywhere and they have some of those decays, and I figured that would be a good trade. I got out way too early again. It went in my favor the very first day. I'm like, I'm just getting out. I hate shorting. But yeah, like, I'm looking at this now. Yeah, things are pretty frothy to the downside. So yeah, you'll probably catch a bounce, but just know, like, maybe down here. Yeah, maybe down here a little bit further. Just be very careful, because if the air is coming out, they can come out a lot faster than the rise, and the rise in these things were crazy fast, like crazy fast. And you can see you're getting a lot of these reversal type candles on the weekly basis on a lot of these names, and they're getting some follow through to the downside. So seeing them come off 50, 60, 70%, like you're gonna see that it names that rose like this. Like what happened to Rigetti today? You know, look at Rigetti, same thing, right? And these are different, right? Oklo is like nuclear, right? And then Rigetti is quantum. But the story names, they're taking a little bit of a heater throw punch today, and have been. But they make for good intraday trades, like, right? So if I'm looking at this, it's been holding this, and it's like kind of at its lower eyeball range. If this pops up, like, you can catch, right? Potentially decent moves back to VWAP or back up to these areas. I'm not like super ready to make those decisions yet. So, but it makes sense if you're starting like a fade position and you're thinking that you're going to bounce. Yeah, that's always a possibility. Right? Sphere, yeah, Sphere was one that I definitely had on the radar many times. This thing is, yeah, this looks great. It's just now we need to see it consolidate. Right over here would have been killer, breaking through these highs. Now it's a little bit crazy, a little bit choppy and sloppy. So I'd want to see things tighten up a bit, even if that means it's higher. But overall, looks pretty good. Kava. A lot of these restaurant retailers are getting smushed, so be careful with the restaurant retailers. But price has been going sideways. It's starting to flatten out a little bit. Yeah, you might get some relief. Just understand the trend and how it's working within the group of all these other names. Look at this, CMG, right? Is this going to start, you know, catching a little bit of a bid here? Maybe. All right, see a little bit of relief. Well, what about like Shake Shack, right? Look at like all these like these names, like they're kind of the same look, right? So are we going to finally get some relief on these restaurant retailers for a day? What's some other restaurant retailers that are like this that have just been getting hit? What about Cake? Cheesecake Factory, right? Back to the year-to-date VWAP, starting to see a little bit of strength. Right? Is this going to offer up a little relief? What else? There's so many of them. You said ALK. That's yeah. I think I still have my little position, which I'll probably. I don't know if I want to hold it into here. I mean, it's so small, but it hasn't gone anywhere. I'm at that green line. It's just a waste of my time right now. But there was option positioning that was crazy up into here. So maybe it was just preparing for a catalyst. Maybe that catalyst is earnings. And then a lot of these, you know, we like looked at DAL today and it's like looking pretty good, right? And we looked at some other ones looking pretty good. So maybe it is telling us something. Target, Target's looking good. This was the trade idea over here. I got out of my position. I took it before this drop, and then I forgot to re-enter or do anything on this little turnaround, but Target playing out fine from these lows. But it is still in a bearish trend, so this is one of those things where, you know, don't be shocked if we break to the lows at some point. Right? You're still fighting a declining 200-day year to date, so. Oscar punch through. Oscar, OSCR. Yeah, Oscar's doing great for me today. So far. looking good. Take a look at the markets. What did coin end up doing? I was watching that on this radar. Yeah, so coin didn't break through this, so it kind of keep on going down. Now it's underneath this VWAP. That's not what you want to see. So now it's back to red. It was yellow, now it's back to red. Let's go back over to SPY. SPY is doing nothing since we started going live. Oh, interesting. Yeah, wasn't paying attention to it. I don't plot it on every chart. I have year-to-date set up right now, pretty standard, and then I'll like adjust VWAP like at a certain like pivot points and maybe month-to-date lows or highs, or starts of months or starts of quarters, and I'll kind of just see if it's around any of those main ones. But I'll typically manually do that, and then right now on Thinkorswim I just have it as set as year-to-date, and then if I go to my other platforms I might change it up. Like I'll look at week-to-date for smaller time frames and kind of go from there. I want to go back to jazz. Dang, this thing does look good. Whatever happened to BlackBerry? Nothing yet. Gotta keep an eye on that now. Kind of interesting. What about Chewy? That was like one of those meme stocks back in the day. That memed out. That ain't doing nothing. What about GameStop? Nothing. What about AMC? What else is there? There's a lot of those names. Market net flow still getting more bearish. 671 to the downside. So maybe if we start sinking off, watch 671 down here. Right there. That would be right back to the year-to-date, or sorry, week-to-date VWAP. Can look at Carvana. Carvana. Yeah, Carvana on the daily time frame is a little too all over the place for me. It's not really that clean look. It's kind of like these higher highs, but then it like broke down to like break it, you know. And then now it's below this 50-day and 20 days. So it needs to set back up. And for me, it's like if I were to enter now, I guess my stop would be down here. And then I guess I would try to target 400. The eyeball ranges, yeah, they're plotted on my screen right now. I built this out for myself. They work okay. They're similar to the Asher levels, the eyeball ranges in the Discord that you can just manually type in. It does seem like we're going to go to that 671. Pretty bearish flow. So if our 672, 671. No, we just broke under 672 and it's a big green bar, so that can press price further. Kind of looks like we want to go down there. So let's see if anything can change quick. But man, it's not doing nothing today. Just fine. Good day to not to like get chopped up. Okay. I think I'm going to call it. I think I'm going to call the stream. Take a break, go get some air. See my kid before he takes his little nap. Yeah, and my battery on my laptop's dying, so it's good times. It's a good timing. All right, y'all. I'm going to take off. Be careful out there. Went over so many different names. Backlip, no, I did not, but thank you. I haven't looked at like deviation channels. I mean, kind of in a way. If you think about this as a standard deviation, like a distribution curve, right? If you think of this as a distribution curve, right, and you get outside of like a certain value of that, there's probabilities that it comes back in within that reversion to the mean type of stuff. So in a way, but I didn't use like specifically standard deviation channels. Like I don't think I've used that. I just used the IV or whatever. All right, guys. See ya. Zolfi, Richard, Zabine, Oscar, Blind Squirrel, Nolan, Ibrahim, Mike. Sorry if I'm butchering names here. Let's see. Toodaloo, everybody. See everybody out there on Twitch. Thanks, LA to Mex. I still remember LA to Mex when you came in and found me on Twitch. Hope everything's going good. Hope you all have a good rest of your day. And I'll see you back. Bye-bye.